Good morning, students. Welcome you all once again on the part 2 of INDES 115. This is the second lecture on INDES 115. And I'm sure you must have gone through with the earlier lectures with the link which has already been provided by the Board of Studies of ICAI. So students, even though if you have not gone through the lecture, if you have not already gone through the lecture, still you can attend these classes. And of course, everything will be covered here. But the only thing is, due to the paucity of time, we will not be able to do a lot of examples and illustration. But yes, as far as concept has been concerned, entire concept will be covered here. Even some examples and illustration will also be covered here. But it is always good to refer the earlier classes which were uploaded by Board of Studies of ICAI for INDES 115 lectures in last year, in this year in February 2022, right? So let's start the classes on INDES 115. So students, I believe my voice is audible to everyone and you are able to hear me out. So I can see 3-4 good morning by Manini, Sumit, Radhika, Rohan. Good, let's start the journey. So we have read in the first class or in the last class, which was conducted on 27th October, we have read that this standard covers the revenue which is as per the contract with the customer. So we have covered three aspects in the last class. One, we understood what is meant by revenue. Revenue is a subset of income. It is a part of income which arises from the ordinary course of the business of the entity, right? So revenue is a bread and butter of the entity. Revenue is something which entity is earning in the regular course, in the routine of its business, right? There should be a contract with the customers, right? And the counterparty or the other party should be considered as a customer. And who is a customer? Customer is a party who is obtaining the goods and services which are the output of the entity in the ordinary course of the entity, in the ordinary course of the business, and in lieu of a consideration paid by that party to the entity, right? So we are well versed with these three words: revenue, contract, and customers, right? Then friends, we have discussed that in IFRS, it is IFRS 15. In Ind AS, it is Ind AS 115. And in IGAP, it is AS 7 and AS 9. Two standards were there in IGAP, right? Then we discussed that for recognizing any revenue, to the entity under Indian accounting standard, there are 5 evaluation, and those 5 evaluation are nomenclated as 5-step model in this Ind AS 115, right? So we will discuss one by one. And in the last class, we have discussed the step 1, which is identify the contract with the customer, right? So we have also discussed that whatever revenue will be generated in this world will be recognized as per Ind AS 115, except what? There is some negative list which is given in the standard, except leasing contract. Because if you are into a leasing contract and if you are earning rentals, then Ind AS 115 is not a right standard for you. Ind AS 116 will be a right standard for you, right? Insurance contract. If an insurance company is earning a revenue from its policy holders, right? They are selling the insurance policies to the policy holders. So policy holders are the customer for the insurance entity. And the revenue which is generated by the insurance companies or insurance entities on account of insurance contract will be accounted for not as per Ind AS 115, but as per Ind AS 104. Again, if it is a financial instrument, though that financial instrument is also dealt in by Ind AS 109, not by Ind AS 115. For example, if a company is getting a revenue on account of fixed deposit, so the interest on account of fixed deposit, so that revenue, even though it is in the routine of the business, even it is in the ordinary course of the business, still that revenue will be recognized as per Ind AS 109, not as per Ind AS 115. Okay. Non-monetary exchanges between the entities in the same line of business to facilitate sales to customer or potential customer. So this is more talking about the artificial revenue, right? You remember my Louis Philippe or garment company example, when there are 2 Louis Philippe outlet and each of them are selling goods to each other. Okay. Certain transactions that do not arise from a contract from customers, such as dividend. For example, if a parent company has invested in subsidiary, an investor has invested in an associate, or a venturer has been invested in a joint venture, right? Or a shareholder has been invested in the shares of a company. So if these guys are getting a dividend, so such a dividend is not received in the capacity of a customer. Such a dividend has not been accounted for under Ind AS 115. Rather, such dividend has to be accounted for under different standard. Okay? Then we have discussed that for every revenue which is rising in this particular world, and if it is coming within the kitty of Ind AS 115, then you have five-step model. Five-step model. What is this five-step model? The first step is identify the contract with the customer. And my dear friends, we have discussed a lot about contract. Contract does not mean that you have to sign a piece of paper, right? For example, if you're buying a grocery, or let's take a very small example. If you're buying a Maggie, you went to the shopkeeper, right? And you paid around 11 rupees or 12 rupees to buy a Maggie. So don't you think there is a contract established between you and the shopkeeper, right? It does not mean that for buying a 11 or 12 rupees Maggie, you have to sign a contract worth 100 rupees piece of paper on 100 rupees stamp paper with a shopkeeper. It does not mean. So when you are buying a Maggie and when you have paid a consideration to the shopkeeper, so you are expected or you are entitled for all those genuine rights associated with the Maggie. What could be those rights? First, you have to, that Maggie should not be expired, right? Okay, it should be, the validity period should be there for, it is healthy for consumption, right? And if you will get sick or if you will feel sick after eating that Maggie, even you can sue to that shopkeeper, to the company. Okay. So friends, identify the contract with the customer does not mean that the contract should always be in writing. Contracts should be as per the business practices. Contracts should be implied. Contracts should be expressed. Contracts should be written. Contracts should be oral. Right? So first, there must be a contract with the customer. It should be in any form. It should be valid. And we have read that there must be a 5 conditions, and all those conditions should be satisfied when we were talking about that there should be a contract with the customer. And what were those 5 conditions? You remember those 5 conditions? The parties must have approved the contract and are committed to perform, right? And each party's rights are identifiable. Who will pay what, that is clear. Okay. The contract must be having a commercial substance, right? And it is probable that the entity will collect the consideration. If the entity will not be able to collect the full consideration probability is not there, then the partial consideration till the time, to the extent, whatever probability is there, to that extent revenue should be recognized and remaining revenue should be postponed till the time the certainty will be reached. Okay. Then the step we have discussed, and you must remember that helicopter view example of that air condition, stabilizer, installation service and maintenance service. And then we have discussed that you need to identify the performance obligation in the contract. Whenever I am saying in the contract, please understand, we are talking more about the transaction. Okay. For example, in my example of Maggie, what was the performance obligation from the shopkeeper standpoint of view? The performance obligation was to deliver, was to give Maggie, was to hand over this Maggie to the customer. Okay. Then the third one was to determine the transaction price. Once you have identified, yes, this is a contract with the customer, then you have identified, okay. So the first step is a entry gate to Ind AS 115. When it is evaluated, yes, it is a contract with the customer. Then you need to identify what are the performance obligation in the transaction or a contract. Then you need to determine, because for recording in the books of accounts, you need a value. Okay. You need a value. And then you need to determine what is the value. What is the value means what is the transaction price for that transaction. When I'm saying contract, it is nothing. It's a transaction. Then guys, step 4 comes into picture when you are saying that allocate the transaction price to the performance obligation. What is the allocation means? For example, your mom has told you, your mother has told you that Soham, please buy rice pulses, and let's say Maggie from the kirana shop, from the grocery shop. You went to the grocery shop and you have asked the shopkeeper, please give me 1 kg of rice, 1 kg of pulses, and one packet of Maggie. He has asked 200 rupees. He demanded 200 rupees, okay, from you. So then you will ask, na, 200, you are a CA student. Then you will ask 200 rupees for what? For what? So what is the allocation for this 200 rupees? Then he will say, this 1 kg rice is costing rupees 80. This 1 kg pulses is costing rupees, let's say, 100. And this Maggie this Maggie is costing you rupees 20, right? So first you have asked what is the full amount. He told 200 rupees. Then you've asked the bifurcation, that what is the bifurcation of these performance obligation, right? There are 3 performance obligation: rice, pulses, and Maggie. There are 3 different goods and services, right? So then you ask what is the bifurcation of the price? What is the standalone selling price? Then this allocation happens. The shopkeeper has done the allocation. He has told you that rice, pulses, and Maggie is worth this much of amount. Then you need to recognize revenue over the period of time, and at a point in time, I mean to say, when each performance obligation is satisfied. What does it mean? When each promised goods and services are satisfied means when the performance obligation is completed, when the customer can enjoy the fruit of that performance obligation, right? When the customer will have a control over those performance obligations. I believe the context is clear to all of you, and we have done the entire revision what we have done in the last class, right? We have done 3-4 examples as well, guys, right? Let's discuss the further concept. Is it good so far? Radhika, Rohan, Soham, Sumit, Manini. Is it good so far? Shall I move forward? Okay. Good. Let's move on. Now let's discuss when 2 different contracts can be combined and can be classified as a single contract. Can be combined and classified as a single contract. Okay. So friends, let's start with an example. For example, I'm a financial reporting teacher. Okay. And I have authored a book also on financial reporting. So, and I'm running, let's say, coaching classes. So Sumit came to me and Sumit asked, sir, what is the fees for the coaching class? I told Sumit that my fees is 5,000 rupees for this entire FR class for CA Final. Okay. So this is one performance obligation from my side. Second, I told Sumit that I have also authored a book, right, on Ind AS or on financial reporting. And the cost of the book is, let's say, 2,000 rupees. So if anyone wants to, purchase that book, he can purchase that book. Or if anyone does not wants to buy that book, doesn't matter. Okay. They can read from study material. They can read from other book as well. So the point is I'm selling books and I'm delivering classes. So these are the 2 different performance obligation, 2 different goods and services, right? All agree? All agree? These are the 2 different performance obligation. These are the 2 different these are the 2 different goods and services, 2 different performance obligation. Now I'm flipping my example. So I have told students that of course I'm delivering my classes. The fees is 5,000 rupees. And I'm also selling books on Ind AS, right? And that book is also having some concept in a limited manner, and only questions are there. As far as answers is concerned, I will explain all the answers in my classes, right? And in my classes, I'll take all the illustration and all the questions from that book only. The price is 2,000 rupees, but if the student will purchase this book, I'll give him at 1,000 rupees. Now the first question, This book cannot be used in isolation. If somebody who is not taking my classes, he cannot use that book. And someone who is taking my classes, he has to take this book, because I have told that all the questions and illustration I'll take from that book, right? So friends, although going by the form, it seems like delivering a classes and selling a book, these are the two different performance obligation, right? But when you look at these two aspects, you will find that this is not two performance obligation. This is a single performance obligation. And this classes and book, the consideration of one thing is depending on the other thing as well, right? Although the price is 2000 rupees, but the students who are using or who are taking my classes, I'm giving them at 1000 rupees, right? So it is not two different contract, it is one contract. This two different performance obligation, or let's say Sumit is giving me 5000 rupees today and Sumit will pay me 1000 rupees day after tomorrow. Still, these two contracts should be combined and should be seen as a single contract going by the substance. Okay. So friends, let me tell you, at times student and chartered accountant used to tell me, sir, this standard is very lengthy. This standard is very complex. Let me tell you, this standard is lengthy, I do agree. But the standard is complex, I don't agree. Right? If you will understand this standard, if you will practice it very well, right? If you will relate this standard from your day-to-day life, you will find this standard very logical, very straightforward, right? And this standard is based on the substance over form. This standard is based on the substance over form. I'll take a classic example here. For example, everyone knows that when you go to buy a car, the first service, or let's say the three services are free, right? Whenever you went to buy a car, the dealer will say you that the first service is free. Now the question arises, is it actually free, or is it something which is a packaged contract? If you're buying a car worth 10 lakh of rupees, is it actually free? It is not free. It is considered as free, but it is actually not free. Since he is giving you service because you have purchased the car, it means, and the service, and the dealer will provide you the service. And let me tell you, the dealer will incur some cost as well for providing you the service. So friends, the dealer or the company has already factored the cost of the service when you are buying a car, right? When you are buying a car. So the thing is, the dealer is delivering your car today and the service he will deliver after 1 year. So don't you think, going by the cost matching principle, when he will deliver the service to you after 1 year, then only, if the cost will be recognized at that point of time, then only the revenue should be recognized? Answer is yes, going by the matching principle. Second, delivering a car is nothing to do with the maintenance or free maintenance service, right? So probably that customer will come to you or that customer will not come to you, right? So these are the two different performance obligation, and hence the revenue should be recognized only to the extent of sale of car and not to the extent of providing a maintenance service until and unless that maintenance service will be satisfied or will be given, right? Is it clear to all of you? So this standard is a substance-based standard, right? This standard is not a form-based standard, it is a substance-based standard. So friends, when two contracts can be combined, first you need to see, are the contract entered into at or near the same time, entered into at or near the same time, or with the same customer or related parties, with the same customer or related parties of the customer. First, you need to look at whether this contract is entered into at same time or nearly the same time, at same time or nearly the same time. Okay. First, you need to see that whether the contract is entered into same time or nearly the same time. For example, when I have told that I'm delivering classes and I have also authored a book, right? And this book can be used by anyone. but the student who will take my classes, I'll give them 50% discount, right? So friends, in this case, if Soham will come to me for buying my classes, and he also came to me for buying my book, right? At the same time, or let's say within a week's time. So it means the contract is entered into with the Soham with the Soham at the same time or nearly the same time. Okay. With the same customer, Soham is the same customer or related parties of the customer. Soham's brother is also a CA final student and he is needing a book. So Soham's brother is purchasing a book from me and he is negotiating that, sir, my this book is for Soham only and he has taken a classes from you and he has sent me to buy this book, right? So please give me the discount which you are supposed to provide to the Soham. Okay. So friends, if this is the case, the contracts are entered into a same time or nearly the same time with the same customer or the related parties of the customer, right? If it is yes, then you need to see whether one or more of the conditions is getting satisfied, whether the one or more of the criteria is meeting. What is that criteria? Contracts are negotiated as a single commercial package. Contract are negotiated as a single commercial package. Consideration in one contract depend on the other contract, and goods or services are single performance obligation. For example, at times when people will give more than one services, or when the people are delivering more than one goods or services, right? What will they do? For example, at times, manufacturer will say that, okay, when I'll deliver this goods to you, so basically if you will buy the goods from me, I will give you free delivery. I will give you free installation. What does it mean? It means that this entire contract is negotiated as a single package, right? And it is negotiated with a single commercial objective. And the manufacturer shopkeeper is thinking that if I will provide a free delivery or free installation, probably I'll incur some cost to that, right? Probably I'll incur some cost to that. I will lose here. But of course, if due to the free service and free installation, customer will buy the product for me, I will gain from there. I will earn margins from there, right? So at times, the vendor, supplier, shopkeeper, manufacturer are happy to lose at one end, but it is gaining from the other performance obligation. So friends, you need to see if the contract is negotiated as a single commercial package, or consideration in one contract depends on the other contract. Like if you have purchased my classes, then only you will get the 50% discount. Otherwise, you will not. Or goods or services are single performance obligation. These goods or services are single performance obligation. If the answer is yes, then you need to account for contract together as a single contract. For example, the supplier is saying that I'll sell the goods to you and I'll deliver the goods to you and I'll also provide the installation services to you. So you need to see that whether it is a single performance obligation or it is a multiple performance obligation, right? Clear? The example of single performance obligation could be, for example, you have bought a bicycle from Amazon, right? And when you bought a bicycle from Amazon, the entire bicycle did not came. What came? 2 different tires, bearings, handle, bell, seat cover, seats, right? Some iron rods, some nut bolt, right? So different parts has been packaged and it has delivered to you. So do you think that you will be able to enjoy those parts as a bicycle without assembling? Answer is no. So you bought a bicycle. When you have seen, or when you are going to buy this bicycle from Amazon, you have not seen the parts, right? You have seen a proper bicycle, a picture of a proper bicycle, a video of a bicycle, right? So friends, in this case, Amazon is giving 3 things. 1, Amazon has sent some parts to you. Amazon has delivered. So those parts probably belongs to a different companies, right? And Amazon has also delivered these parts to at your doorstep. Okay. 3rd, Amazon will also provide assembly services. Without assembling, you cannot enjoy the utility of those parts or utility of those products, right? Now the question arises, sir, whether delivering of those parts, whether those selling of those parts, delivery of those parts, and assembling of those parts, is it a three different performance obligation? Answer is no. Amazon will recognize revenue only when these parts will be assembled. Why? Because the customer will be able to benefit it only when these parts will be assembled, right? So friends, in accounting standard 9, you have read the concept of risk and reward. Am I right? Do you remember the concept of the risk and reward? Do you have you remember the concept of risk and reward? The revenue has to be recognized and the risk and reward has to be transferred. So friends, in Ind AS 115, the criteria is much beyond the risk and reward, and it says that you have to recognize the revenue when the control has been transferred to the customer. And what is the definition of control? Control means, of course, physical possession is transferred. Of course, your risk and reward has been transferred, and the customer is able to get the benefit which is expected out of that product, right? And that is why only the company will recognize the revenue when the customer will be able to use that product, right? Understood? So Koshiki, you will get the answer when I'll move on to the performance obligation. Just to set the context, what is meant by performance obligation? Performance obligation are different goods and services, and these will be considered as a separate performance obligation. When the single performance obligation, you will be able to enjoy the fruit of those goods and services either at your own or by the readily available resources. For example, services of a car. The delivery of car and the service of car is two different performance obligation. Why? Because the delivery of the car and the service of the car is nothing to do with the delivery of the car, and delivery of the car is nothing to do with the service of the car. If you purchase a car from Delhi, you can get the service from anywhere in India. You can get the service from a local workshop, from a local vendor, right? So you can get the service either at your own or with the help of the readily available resources, right? I've seen my father, he can change air filter, oil filter, diesel filter, he can change himself, right? So friends, when the customer will be able to use the goods at their own, right, or with the help of readily available resources, then you can say that there are different performance obligation. Okay. In case of Amazon, what do you think? When Amazon will recognize the revenue? What do you think? When Amazon will recognize the revenue? When Amazon ship the product or when Amazon deliver the product? Friends, what do you think? When Amazon will recognize the revenue? When Amazon ships the product or when Amazon deliver the product? Yes, when Amazon deliver the product. When the goods are delivered, then only Amazon will recognize the revenue. But you went to a Chroma, or let's say a Tata Chroma, or Vijay Sales, or let's say Reliance Digital. You went their shop, you went at their outlet, you bought a refrigerator, and you have to arrange the delivery at your own, right? In this case, when Chroma, Vijay Sales, or Reliance Digital will recognize the revenue? When they have sold the refrigerator to you, or when the delivery happens at your doorstep? When they have sold the product to you, because delivery is your headache, not their headache. You can help, you can take their help. You can say that I'll pay you the delivery cost, please arrange some logistics, right? So when they will sell the product, they will recognize the revenue. But in case of Amazon, Amazon is not recognizing the revenue when they're shipping the product. They are recognizing the revenue when they're delivering the product. Okay. Understood? Yeah. Yeah. So friends, two contracts will be combined when contracts are negotiated as a single commercial package, Okay, or consideration in one contract is interrelated depending on the other contract, and when the goods or services are single performance obligation, right? So if the answer is yes, any of the condition is getting satisfied, all, whether one or more of the condition is getting satisfied, you have to account for contracts together as a single contract. Otherwise, you need to account for contract as a separate contract. Okay. Illustration number 4. Manufacturer of airplanes for the Air Force negotiate a contract to design and manufacture new fighter planes for Kashmir Air Base. So probably the Air Force is negotiating a contract with the air defense suppliers to design and manufacture a new fighter planes for Kashmir Air Base. Okay. At the same meeting, the manufacturer enters at the same meeting, the same customer. Okay. At the same time, at the same and then the same customer, the manufacturer enters into a separate contract to supply parts for existing planes at other bases. See, there are two contracts here. One is manufacturing. One is to design and manufacture new airplanes. The second one is supply parts. Second one is accessories or supply of parts for existing airplanes. Now tell me, is it a single performance obligation or is it a dual or two performance obligation? Now tell me. The new airplane is having a different utility, and the supply of parts has a different utility. These parts will be used in the existing airplane, and the new airplane will come differently, right? At a different time. So is it a single performance obligation or is it a double performance obligation? Yeah, it is a double performance obligation. It is not a single performance obligation. So friends, in this case, contracts were negotiated at the same time, but they appear to have a separate commercial objective. These two have a separate commercial objective. The parts are different, and the manufacturing of new airplanes are different, right? Manufacturing and supply contracts are not dependent on one another, and the planes and the parts are not a single performance obligation, right? These are the different performance obligations. Therefore, contracts for supply of fighter planes and supply of parts shall not be combined, and instead they shall be accounted separately, right? It should be combined separately. Visa is having a question, sir. Since Amazon and online shopping sites have some end days return policy, when will they recognize revenue in this case? So Avija, in this case, if they have a return policy, then they will recognize the revenue when the customer has approved or accepted the delivery. When I'm saying accepted the delivery, I mean to say the customer has started using the product, right? Or when the expiry period has been elapsed. For example, they have a 15 days return policy, right? In this case, they will recognize the revenue when the 15 days will be over. Okay. Soham is asking, sir, if the goods are sold to a customer and they are in custody of seller for some job work, then when will be revenue recognized, at time of selling or when the product is delivered? So let's take an example. I have bought a car from a Maruti dealer, right? So Maruti dealer has delivered that car to me. Okay. Instead of taking the delivery, I have told the dealer that I want to change this entire seat structure. Okay. And I want this, I want you to please install these accessories on my car, right? And I want to change my stereo as well, right? So I want to get some modification in that car, and for that I have not taken the delivery, although I took the delivery and return it to the dealer. Return it to, I mean to say, I give it to the dealer and said that please do these kind of works on my car, and then I'll take the delivery. In this case, the car is lying with the dealer on the instruction of the customer, right? In this case, the car dealer will recognize the revenue from the sale of car at the time when the sale of the car happens, right? As far as the modification, accessories, seat, stereo is concerned, he will recognize the revenue when he will put those items in the car, and when after putting the item, when he will deliver that to the customer, right? Sumit is asking, in some cases where no return period is there, then Amazon providing full refund without return. In these cases, when revenue will be recognized, where no return period is there, then Amazon providing full refund without return. Sumit, so that is more of a customer related favorable policies of Amazon. But let me tell you, if there is no return period, in that case, the revenue has to be recognized upfront when the goods have been delivered, right? But of course, the Amazon is recognizing some provisions for return, okay, or provision for warranty. Amazon is recognizing those liabilities, those provisions. Okay, is it clear? Soham, Avija, and Sumit, is it clear to all of you? Yeah. Illustration number 5. Software company S enters into a contract to license its customer relationship management software to customer B. There is a company S, and this company S has entered into a contract to license its customer relationship management software to customer B. So this is the name of the software, customer relationship management software. So S has sold this software or given the license of this software to customer B. 3 days later, in a separate contract, so just after 3 days, S agrees to provide consultancy services to significantly customize the license software to function in B's IT environment, right? B is unable to use the software until the customization services are completed. So friends, S has sold the software to B, but when B bought this software or bought the right to operate this software, bought the license for this software, then B has realized that this software is not compatible to my IT environment, to my information technology environment. So then B contacted to S, and S agrees to provide the consultancy services to significantly modify, significantly customize this license software only for B. And let me tell you, without getting those consultancy services, B is not able to use this software. So now, if I talk about the activities, there are two activities. One, sale of software and consultancy services. But if I talk about the performance obligation, friends, tell me whether there are two performance obligation or whether there is a one performance obligation. Whether when the S has sold software to B, whether B would be able to use that software, whether the economic benefits has been passed on to the B, whether B will be able to utilize the fruits from that software until and unless it is customized. Yeah. Until and unless it is customized. Yeah. Tell me. Sumit is saying single performance obligation. Yes, you are right, Sumit. So friends, I'm not saying that S is responsible for getting it ready to their environment. But the point is, S agrees to provide consultancy services. S is charging for that, right? Guys, don't get confused by the accounting and by the operations. Don't get confused, right? I'm not saying that S is responsible for getting that software operating into the B's IT environment. S is not responsible for that. And that is why S is giving a consultancy and S is charging for that. But as far as the accounting fundamental are concerned, is it a two different contracts or whether this will be considered as a single contract? So this will be considered as a single performance obligation. So S will be able to recognize revenue when this consultancy service will be provided to B. Why? Because S agrees because S agrees, right? So it's just like that. It's just like that. I have sold books to you guys, and I've told that I will, I will discuss the answer of the questions given in this book in my classes. So it's just like that. Whether I should upfront recognize the revenue from the sale of the book right away, or I should have to recognize the revenue only when that I'll deliver the classes. So I have to recognize the revenue only when I'll deliver the classes. Why? Because you will be able to use that book only when I will discuss the solution in my classes, right? So it will be a single performance obligation. It does not mean that I'm not charging for the book. I'm charging for the book separately and I'm charging for the classes separately, right? But when should I recognize the revenue? I should recognize the revenue when I will deliver my classes as well, because this delivering classes and selling a book, these are not two different performance obligations. These are single performance obligation in this particular contract. So you have to look at the substance for that, right? So S determined that two contracts should be combined. Why? Because they were entered into at or nearly the same time with the same customer, and the goods or services in the contract are single performance obligation. So friends, in this case, Sumit is asking, but if customization can be done from third party, then Sumit, then of course, in that case, S has to be recognized, S has to recognize revenue. See from the perspective of S, right? The customization and selling of a software, is it a contract with the same customer? Answer is no, because you yourself is saying that the customization is provided by the different vendor, right? So S has only sold that software. So the first condition is getting defeated. What is the first condition? The contract has been entered with the same customer at the same time or nearly the same time. And you yourself is saying that the second service is given by some other vendor. There is no question of combination of contract, right? Sumit is asking, at the time of sale, how S knows that customization contract will be fulfilled by S only. So Sumit, let me tell you, normally what happens practically, right? When these kind of things happens, and if I talk about the books of accounts, like when you're closing the books on 31st March, right? In that case, when you're closing the books on 31st March, in this case, you are not passing every entry on 31st March. The bookkeeping is going on for the period after 31st March as well, right? And even at the same time, for example, you are saying that, sir, S has recorded the accounting entry on that day only. And after 3 days or after 2 days, they will S will able to know that I have to give this consultancy also because B is not able to use that product, right? So it does not matter. In that case, you have to modify that accounting entry. Whatever you have passed 2-3 days back, you have to reverse that. And now you have to recognize the accounting entry in the parlance of the updated conditions, right? So you have to look this entire contract as a single contract. You have to look at the entire performance obligation as a single performance obligation, that total transaction price as a single transaction price, and then you need to recognize the revenue, right? Sir, what happens on the GST doesn't matter. Your taxes are different, your accounting is different. Doesn't matter if you raise an invoice and if you have collected a GST, you have to pay the GST. That GST is nothing to do with the performance obligation, right? Is it clear to you guys? Is it clear to you guys? Clear or not clear? Very good question. Soham has asked, sir, what is the impact of classification of contract as combined and single on the accounting treatment? Right. I will discuss this again with the help of a real-time example. I went to the Chroma dealer, Tata Chroma or Reliance Digital or Vijay Sales. And I told them that I want to buy a refrigerator, right? I want to buy a refrigerator. So they said, okay. They have shown me a Samsung refrigerator, okay? And I told them, okay, I love this refrigerator. I like this refrigerator. And I purchased that refrigerator. And the dealer said that that we are not responsible for any delivery. You have to take the delivery at your own, right? We know few logistic guys who are delivering this, right? So if you want, I can give you the contact number. You have to deal with them. You have to pay directly to them. You have to negotiate with them. Headache is yours. And this transaction happened on 28th March 2022. Soham, tell me, in this case, if the year is ending on 31st March, so when this revenue from the sale of refrigerator will be recognized? When it will be delivered or when it will be sold? Tell me. When the revenue has to be recognized? When it is delivered or when it is sold? Yeah, when it is sold. You're right, Rohan. Right, Radhika, when it is sold. Of course, perfect, Srishti, when it is sold. Second example, same contract, same customer is asking for the refrigerator and he is asking for the delivery as well. And the shopkeeper is saying that, yes, we will deliver also. You have to pay me 500 rupees for the delivery and we are delivering it also. Okay, we are delivering it also. So, and let me tell you the real life scenario of Reliance Digital. Last year, I bought a refrigerator on 29th March because some offer was going on, right? On 29th March. And when I asked for the delivery of the refrigerator, that I need the refrigerator today only, they said that the refrigerators are there in the godown, which is in Haryana. And it will take, and I'm in Delhi. So it will take around 3 to 4 days in the delivery. And don't worry, we will deliver it to you, right? We will deliver it to you. So if you look at, there are two different performance obligations. One is sale of refrigerator. Second is delivery of the refrigerator, right? And Reliance Digital was responsible for the delivering. They have negotiated these two contracts with me, right? They have told that we will deliver and we will charge only 500 rupees or 200 rupees for delivery. Friends, in this case, tell me, they have not given me any option. It was not there in their shop. It was there in the godown, right? So friends, please tell me, in this case, when Reliance has sold that refrigerator on 29th March and I got the delivery on 5th April. So friends, whether this entire revenue has to be recognized on 31st March or Reliance will recognize the revenue on 5th April. Tell me, when Reliance will recognize the revenue? Srishti is saying at the time of delivery. Very good. Soham, what is your view? Rashmi, in the first example, Rashmi has told 28th March. You are right. But in the second example, when Reliance is delivering, they are responsible for delivery. So is it on 31st March? I mean to say 29th March, or is it on 5th April? Everyone is saying, Sumit, Manini, Soham, everyone is saying after delivery, 5th April. Soham, have you got your answer? That how this separation of contract or combination of contract will impact the revenue recognition? In the first case, the revenue was recognized before 31st March in the last financial year. In the second case, the revenue was recognized in the next financial year. Soham and other students, have you got the answer? So guys, I request everyone to please keep raising queries, keep raising questions. Okay, probably your question will help in clearing the doubt of other students as well, right? Few students normally ask questions, few students does not ask questions. Please raise your questions, okay? Does not matter right or wrong, please raise. Here, good, let's move on. Now coming to the contract modification, right? This contract modification is again a very important concept. What is meant by modification? For example, let's say Koshiki is a contractor, okay? And I want some contractor who can construct my house. So I contacted Koshiki and she told that, yes, sir, I'll construct your house, okay? And I told her that I need a house to be constructed as a 2-story house. So 2 floors should be there and it should be constructed on 500 square feet area. Okay. She told that, okay, I'll charge 10 lakh rupees for the construction of your house. Okay. When the construction started, after 15-20 days, I told her that instead of 2-story, I need 3-story building. Is it a modification? Yes, the scope has been increased. The scope has been increased, right? So earlier I told her for 2-story and she told me 10 lakh rupees of price. When I'm asking to construct one more floor, probably the price will also increase, right? So when the scope is increasing and the price is also increasing, it tend to amount to a modification. Right? So what is the contract modification? A contract modification is change in the scope or price of the contract approved by the parties, right? And the accounting treatment again depend on the nature of modification. Let's take another example. For example, I'm a trainer of IndAS. So a company contacted me to provide some IndAS trainings, right? And they have contacted me to provide, let's say, 10 classes or 10 IndAS trainings, right? 10 classes on IndAS trainings. So friends, in this case, a company contacted me and company asked that Mr. Alok Garg, we want your services for 10 classes. I told them, okay. So my rate is 20,000 rupees per class. So for 10 classes, you have to pay me 2 lakh rupees as a training fees. They said, okay. So after few classes, let's say after 3 or 4 classes, they told me that instead of 10 classes, we want 15 classes. We want additionally 5 classes. I told them, okay, if you want additionally 5 classes, means scope has been increased. So I told them, doesn't matter. You have to pay me a cost for 5 additional classes at the fair value. At the fair value means if for one class I'm taking 20,000 rupees, for another 5 class you have to pay me 1 lakh rupees. You have to pay me 1 lakh rupees, right? So in this case, the scope has been increased. In this case, the scope has been increased. The scope has been increased, right? In this case, the scope is increased. And when the scope is increased, the price is also increased. And when the price is increased at the standalone selling price. The price is increased by, price is also increased. The price is also increased at fair value or at standalone selling price or at market value, right? So friends, the modification in the contract will be considered as a separate contract when the scope of the contract changes. Scope of the contract changes due to the addition in goods and services, which are distinct. What is the meaning of distinct? Distinct means different. Distinct means different. Distinct means different. Distinct means different. You will find this word a lot of places. Distinct means different. So after modification, if the added goods and services are different means, so in this case, the next 5 classes will be different from the initial 10 classes, right? So whatever I have taught in the first 10 classes, so in the next 5 classes, I will probably taught differently, right? I will probably take the classes on different topics, right? The timings would be different. When I'm saying the timings would be different, so the first 10 classes would be on some different day and the 5 classes would be on some different day, right? So these are the different goods and services. I'm not talking about the nature. I'm talking about the utility. On those 5 classes, people who will attend those 5 classes will be benefited. People who will attend these 10 classes will be benefited out by these 10 classes, right? If X is attending these 10 classes but not attending those 5 classes, X will not get the benefit of those 5 classes. If Y is attending those 5 classes but not attending these 10 classes, will not get the benefit of these 10, he will get the benefit of those 5. So the point is, after modification, if the scope is increasing and increased by way of different goods and services, right? And the price of the contract is also increased by standalone selling price of the added goods and services. So first, goods and services have been added, and these goods and services have been added at their standalone selling price or their fair value, right? Is it clear? If this is the case, it will be considered as a modification, and this modification will be considered as a separate contract. Sir, again, please tell us, how does it makes a difference, right? And let's take another example as well. So let me go to my Excel file. Please let me know if my Excel file is visible, and then I will discuss this contract modification example. Contract modification. If the scope increased by way of adding goods and services, which is different from earlier one. When I'm saying different, I'm not talking about nature. I'm saying these will be having a different utility. For example, I'm a company and I've ordered OnePlus. I have ordered OnePlus company to deliver mobile phones to me for my employees. I have ordered for 100 quantities, right? And after a few days, I have ordered additional 50 quantities. And those 50 quantities are also at their fair value, right? When I have ordered 100 quantities, that time the fair value was, let's say, 50,000 rupees for OnePlus 9 phone. And after 15 days, when I've ordered additional 50 quantities, now the price becomes cheaper and it is available at 45,000 rupees, right? So you cannot say that since I have purchased 100 quantities, that is why he is giving me a discount, right? So the additional 50 quantities is at fair value only. At that point of time, the standalone selling price is at 50,000 rupees only. Sorry, 45,000 rupees only. So in this case, it will be considered as a contract modification and the new contract will be considered as a separate contract. Okay. Second example, when I've ordered 100 mobile phones, right? And after a few days, when I've ordered 50 mobile phones, I've asked company that, see, I'm giving you 150 mobile phone orders, right? So please give me the another 50 mobile phones at 45,000 rupees. At 45,000 rupees, right? And don't think that I'm asking for a discount of 5,000 rupees per mobile phone on those 50 mobile phones. Think from the global perspective. I have ordered you 150 mobile phones. I have ordered you for 150 mobile phones. So you have to look in this manner. For 100 mobile phones, I'm paying you 50,000 rupees, right? And for the next 50 mobile phones, I'm paying you 45,000 rupees. So you don't need to see this in this particular manner that I'm asking for a 5,000 rupees discount. I'm not asking for a 5,000 rupees discount. The total consideration, I'm paying you 72,50,000 rupees. Now asking for the mobile 150 mobile phones. So how much discount I'm asking? I'm only asking a discount of how much? 50,000 minus 48,333. I'm asking for the discount only for 1,667 rupees. I'm not asking for 5,000 rupees. See how this contract has been negotiated. How this contract has been negotiated. Right. So what does it mean? It means the additional goods and services, the additional 50 mobile phones, are not at their standalone selling price. Right. So in this case, this contract will not be considered as a separate contract. This contract will be considered as a existing contract, modification in existing contract. Right. So this is having an impact on these things. Right. So friends, if the scope is increased by way of adding goods and services, which is different from earlier ones, and price is also increased on the basis of fair value, or let's say market value, or let's say standalone selling price of the additional goods and services. Right? Example, initial contract, initial contract, contract classes or lectures, 10 lectures, rate 20,000, total value 10 into 20,000. Okay, clear? Then after 6 classes delivered, the company wants a on training for 5 more classes. Again, 5 more classes. And at that point of time, the market value of such trainings is at 18,000 rupees. 18,000 rupees. So in this case, friends, you will not say that this is a discount. Market value has gone down. So this is considered as a separate contract. 18,000, right? So this will be considered as a new contract, and it has to be accounted as a separate contract, right? Now the second, so this was the case 1. Now I'll show you that how this will be treated differently. Case 2, right? So the scope has been increased, but the price has not been increased at market value. The scope has been increased, but either the price has not been increased or price has not been increased at a market value, right? Example, initial contract, this one, 10 classes, 20,000 rate, total is 2 lakh rupees. Till 31st March, 6 classes were delivered, right? Subsequently, the company need training on 5 more classes, and they have negotiated at 17,000 per class, considering they were giving business to the trainer for 15 classes. Friends, what they are saying that you should not see this 5 classes in isolation. You need to see this 15 classes, right? So we are not saying, so what is the total? What if 17,000 rupees will be there? Let's say 17,000 rupees will be there for 15 classes. So 17,000 multiplied by 15, this will be coming out at 2,55,000. 2 lakh rupees contract has already been entered. So the next one is 55,000. So 5 classes they want additionally. What is the rate? Rate is how much? The rate is 55,000. The rate is 55,000. So it does not mean, if you will look at the additional 5 classes, for additional 5 classes, the company wants to pay only 11,000 rupees, which is not at market value. So what does it mean? It means this entire contract has been negotiated as a single contract. Okay. This entire contract has been negotiated as a single contract. And in this case, you have to modify this contract, and you have to look at the revised contract. What is the revised contract? So after revising this contract, what will be my commercials? My total value was restricted at 2,55,000, or I can say that 15 classes contract is there. Rate becomes 17,000, and the total price is negotiated at 2,55,000, right? So friends, in this case, this is a modification. This 5 classes will not be considered as a separate contract. This will be considered as a modification in the contract. This will be considered as a revision in the contract. And 31st March, 6 classes were delivered. So in this case, how much revenue will be recognized? In this case, the revenue will be recognized by, let's say, customer account debit to revenue account. By how much amount? 6 classes have been delivered by 31st, 6 into 17,000. In the same case, in the case 1, in this case, how much revenue will be recognized? In this case, revenue should be recognized by which rate? 18,000 or by 20,000? If you will look at the case 1, in the case 1, the revenue will be recognized for 6 classes, not at 20 plus 18, not at the average of 2,90,000 divided by 15. It has to be recognized 6 multiplied by original rate 20,000. Right? Why? Because in this case, the contract has been negotiated at a market value, right? So this will be considered as a separate contract. So this will be your accounting entry, right? So here, the contract, in this case, in case of contract modification, it will be considered as a consider modification as a new contract, right? Consider the modification as a new contract. Clear? In this case, in the scope 2, consider the modification as a revision in the contract. As a revision. Soham, Sumit, I hope you have understood this concept of modification. You have understood this concept of modification. Yeah. I hope you have understood this concept of modification. Yeah. Is it clear? Sumit, if quantity or bulk discount is there, in that case, if the bulk or quantity discount is there, in that case, it will not be a new contract. It will be a revision in the existing contract. Okay. Soham, it does not make any difference. So Soham, if the contract will be negotiated after year end, okay, when the year has been over, in that case, you have to, take the impact in the next year. You are not required to take the impact in the last year. Okay. You are not required to take the impact in the last year. Is it clear? Is it clear, guys? Guys, is it clear? Yes, Rashmi, in case 1, it is a separate contract. In second one, it is revision of the original contract. Okay. Yeah. Vijay is asking, can there be termination of original creation new contract? Yes. How will be the accounting treatment? Okay. Soham is asking, sale will have to be recognized 17K. Earlier, it was 20K. Let's take an example here. Again, let's elaborate this example. Let's elaborate the case 2 example. Okay. So the company has already recognized revenue for 6 classes at 20,000 rupees, at 20,000 rate, and after closing of the year, the contract has been negotiated at 17,000 rupees at 17,000 when additional classes were proposed. When additional classes were proposed, right? And additional classes were proposed, right? So let's say 20,000 rate in FY 21-22. Okay. So what was the accounting entry which was passed in FY 21-22? The accounting entry passed was customer account debit to revenue account. 6 multiply by 6,000 multiply, sorry, 6 multiply by 20,000, right? 6 multiply by 20,000. Now in FY 22-23, what will happen? The company will recognize revenue for the balance 9 classes, right? For the balance 9 classes. What is the total revenue? What is the total revenue? Total revenue. What should be the total revenue? The total classes are 15. The rate is 17,000. And the total price is 2,55,000. Already recorded. Recognized. How much revenue is already recognized? The revenue is already recognized to the extent of 1,20,000 rupees. Right? 1,20,000 rupees. So what is the balance revenue? So the revenue has already been recognized for 6 classes at a rate of 20,000, right? So what is the balance revenue which is going to be recognized? The balance revenue is going to be recognized for 9 classes. Balance be recognized for 9 classes, which is 1,35,000. So what is the accounting entry? The accounting entry would be customer account debit. Okay, customer account debit. So 1,35,000. You can recognize the revenue, or you can say that the balance revenue has to be recognized at 15,000 rupees, right? You can say that. Clear? This will be the accounting entry. I hope it is clear to all of you. Yeah. I hope it is clear to all of you, friends. Is it clear to you? Sumit, is it clear to you? Koshiki, Rashmi, Radhika, Rohan. Is it clear to all of you guys? Yes or no? Sumit, is it clear? Aviza, is it clear? Yeah. Soham is saying, sir, but if you see the terms of modified contract as at year end, there is misleading picture. Soham, please try to understand. If the contract would have been negotiated before approval of the financial statement, it will be treated as an adjusting event, right? But since the contract has been negotiated after the approval of the financial statement, after financial statement are over, it has been prepared, right? Of course, in that case, you have to take the impact in the year in which the event has taken place, right? It is not giving a misleading picture, because at that point of time, the contract was not renegotiated. the offer for 5 additional classes were not there, right? The offer for 50 additional mobile phones were not there, right? Since the quantity has been increased, it was a bulk quantity. The quantity has been increased, and that is why you can say that the more discount has been asked, right? It is more from the perspective of volume kind of discount. Is it clear? The misleading picture would have been there if the contract has been negotiated at that point of time, but the impact has not been taken, right? How will you be aware of as an auditor? Please tell me. As an auditor, how will you be aware of that? Yes, it is something which is going to be happening in future. Yeah, good. Thank you. Yes. So friends, you have seen that I have told you two cases when the price is increased, when the scope is increased, and proportionately price is also increased. In this case, we have to consider it as a separate contract. But if the scope has been increased, but the price has not been relatively increased, in that case, it has to be considered as a revision in the existing contract. Now, the revision in the existing contract happens in two manner, right? Revision in existing contract happens in two manner. Revision in existing contract happens in two manners. What could be the two manner? So Avija has already told that one, updating the existing contract and take the revised impact. Second, terminate the earlier contract and consider the revised contract as a new contract. Sir, then in the second example, how is it different from the first one? In the first one, when there is a scope changing and price is also proportionately changing. In this case, in the first case, there will be two contracts, initial contract and new contract. There will be two contracts. But in case two, but in revision, in existing contract, there should always be one contract. In the first case, which we have already discussed, customer account debit to revenue account by 1,35,000, the existing contract was revised, right? In the second case, the existing contract terminated and the new contract and the revised contract has been considered as a new contract, right? So these things happened. So when these things happened, when you need to update the existing contract and take the revised impact, you need to update the existing contract and take the revised impact when? And take the revised impact when? When? Let me move to my PowerPoint presentation. Then we will discuss. So friends, if the contract modification is approved, answer is yes, the contract modification is approved. Does the scope of contract increases due to the addition of promised goods or services which are distinct? Answer is yes. So when the goods and different goods and services are added and the price has also been increased, in that case you have to consider this contract modification as a separate contract, right? If the contract modification has not been approved by the parties, of course you are not treating this contract modification as a modification, right? Whether the scope of the contract increased due to addition of promised goods or services which are different, if the answer is no, or the added goods and services are different goods and services, but the relatively price has not been increased, right? Or the second question's answer is no. In that case, it will not be considered as a separate contract. It will be considered as a revision in the contract. But I have told you that the revision in the contract has been happening in the two manner. One, updating the existing contract. Second, terminating the existing contract and considering the revised contract, right? As a new contract. So friends, then if the scope and price are not proportionately changing, then you need to ask one question. What is that question? Are the remaining goods or services different from goods or services transferred on or before the date of contract modification? What does it mean? What does it mean? The goods and services which are provided before modification and the goods and services which are provided after modification, is it the same goods and services or is it a different goods and services? So friends, initially the company has given an order for 100 mobile phones. Subsequently, the company has given an order of 5 or order of 50 mobile phones, 50 mobile phones, right? And these 50 mobile phones are not at fair value, right? Not at fair value. So of course it is not a separate contract. Now tell me, the 100 mobile phone delivered earlier or these 50 mobile phone delivered after. Now tell me whether these are different mobile phones or these are the same mobile phones. These are different mobile phones or these are the same mobile phones. Tell me. These are the different mobile phone, different. I'm not trying to say, guys, when I'm saying different, I'm not trying to say different in terms of their nature, different in terms of their looks, different in terms of the design. I'm not saying that. I'm saying that the different mobile phone has a different utility. For example, if I'm using this mobile phone, probably the another mobile phone will be used by Soham. Probably the another one will be used by Koshiki, Aniket, Manini, Sumit, right? Radhika, Rohan, Srishti, right? Avija. So every mobile phone has a different consumption. Every mobile phone has a different usage, right? Every mobile phone will be used by different parties, right? All the mobile phone can be used at the same point of time, right? Are you getting me? Every mobile phone has its own utility, right? One can use his mobile phone, one cannot use his mobile phone. So the point is these mobile phones, the goods delivered before modification are different from the goods delivered after modification. These are the different goods and services, and the customer will also get the benefit out of those different goods or services, right? For example, if the first lot has been taken by Avija, so Avija will get the benefit out of that lot, and the second lot will be taken by me, so I will be getting the benefit of the second lot, right? So the question will be, are the remaining goods or services are different from the goods or services provided earlier? If answer is yes, then if the answer is yes, then you have to terminate the existing contract and create a new contract. If answer is yes, it is different, then it is a termination of existing contract and creation of a new contract. If answer is no, it forms part of existing contract and a single performance obligation and a single performance obligation and a single performance obligation. The remaining goods and services are not distinct from goods and services. The remaining goods and services are not distinct from goods and services which have been provided before modification. Sir, can you take an example? And these are the single performance obligation. Can you take an example? Yes. For example, I have given a contract to Sumit for a whitewash of my house, for painting of my house. So I have asked Sumit, what is the price? Sumit has quoted a 25,000 rupees price, right? And Sumit told that I will do the single coating of the whitewash. I said, okay. When the work started, I told Sumit that I need a double coating. Right? So friends, of course, the scope has been increased. Right? Earlier it was single coating, now it is double coating. Of course, additional material will be required, additional efforts will be required. So Sumit is also charging for the additional price. Although the price is not as per the efforts, the price is not proportionately increased as the efforts have been increased. So of course, it is not a separate contract, but the question arises. Now tell me, whether the goods and services provided before modification will be different goods and services which will be provided after modification, or it will be a same goods and services, or whether the goods and services which were let's say Sumit has done single coating, now I'm asking for double coating. So whether the customer will have a different benefit, different utility for single coating and different utility for double coating? Answer is no. If I am living in a same room, doesn't matter single coating or double coating, the utility will not change. I will not say that single coating is benefited or is used by my wife, and after double coating it will be benefited to me only. I cannot say that. It does not have a different utility. It has the same utility, right? So in this case, if the remaining goods and services are not different from the existing goods and services, right? In this case, you will say that it is a single performance obligation and it forms part of existing contract, and existing contract needs to be updated. So you need to look at, is it a single performance obligation or is it a different performance obligation, right? Is it clear? So let's discuss this contract modification example quickly, and then we will come to the two case study of institute material. The first one, manufacturer enters into an arrangement with a customer to sell 100 goods for 10,000 rupees, which is 100 rupees per goods. The goods are different and are transferred to the customer over a 6-month period. The parties modify the contract in the 4th month to sell an additional 20 goods for 95 rupees each. The price of the additional goods represent the standalone selling price on the modification date. So on the modification date, the additional quantity is at additional market value, at a market value. So should manufacturer account for the modification as a separate contract? Answer is yes, because the scope is changing. When the scope is increasing, the price is also increasing at a market value. Yes, the modification to sell an additional 20 goods at 95 rupees each should be accounted for as a separate contract, because the additional goods are distinct, different, and the price reflect their standalone selling price. The existing contract would not be affected by the modification, right? Here. Now let's discuss the second illustration, illustration number 7, and now you will get the more clarity. Okay. This is the same which I have discussed. Example number 1. Let me tell you the example, illustration number 8. Right. On 1st April 2001, KLC Limited enters into a contract with Mr. K to provide a machine for rupees 2.5 million. Okay, 25 lakh. 1 year of maintenance services for 55,000 per month. How many performance obligations are there? One for sale of machine, and the second one is 1 year of maintenance services, right? On 1st October, that is after 6 months, KLC Limited and Mr. K agree to modify the contract to reduce the amount of services from 55,000 per month to 45,000 per month, right? So on 1st April, they have delivered the machine. Then there is a 1 year of service, maintenance service, right? But after 6 months, there is a modification. Right? So, and this modification is reduction of price from 55,000 to 45,000, right? So scope is not changing. See, scope is not changing. The price is changing. It means it is not a separate contract. It is not a case of separate contract. Either it is a case of revision in the existing contract, or it is a case of termination of the existing contract and creation of a new contract, right? So friends, tell me whether the services provided before modification are different from the services provided after modification. Yeah. Whether the services provided before modification are different from the services provided after modification. For example, if there is a security guard with whom you have contracted to avail the services for 1 year, the security guard has given you services for 6 months, right? And now he has to serve you for a balance period of 6 months. So tell me, friends, can you say that if the security guard has not given you the service, a proper service for the last 6 months, he has not saved you from the theft, right? He has not diligently performed his activities or security services in the last 6 months. Can he say that, okay, sir, don't worry, I will compensate you for the initial 6 months in the next 6 months? Can he say that? No, I'll perform more diligently in the in for 24 hours. I will serve 36 hours. Can he say that? Answer is no. The services performed in the first 6 months are different from the services performed after 6 months. When I'm talking about different, I'm not talking about the nature. I'm talking about the utility perspective. I'm talking about the usefulness perspective. The earlier 6 months which were provided was having a different utility, different uses. The next 6 months which have been provided is having a different probability, different uses, right? Since he has not diligently provided his service in the first 6 months, so whatever loss has been incurred by the company, it has not been compensated in the next 6 months. In the next 6 months, probably, if he'll perform his duties diligently, probably the loss will not arise. But whatever has been kept, it will not come back. Only due to the proper services given by that service guard, that security guard, right? Are you getting me, guys? Are you getting me? Are you getting me? Yeah. So it is a different, it is different. Okay. So if it is a different, then what will happen? In that case, it will be tantamount to termination of existing contract and creation of a new contract. The next 6 months of service are distinct, different from the utility perspective, from the use perspective, from the benefit perspective, from the services provided in the first 6 months before modification of the contract. Therefore, KLC will account for the contract modification as if it were a termination of the existing contract and the creation of a new contract. And the creation of a new contract. The consideration allocated to remaining performance obligation is 2,70,000, which is the sum of the consideration promised by the customer, right? And the consideration as a part of the contract modification, which is 2,70,000, right? So 55,000 multiplied by 6. For the first 6 months, it is 55,000 multiplied by 6, which is coming out at how much? 3,30,000. And the new contract will be at 45,000 multiplied by 6, which is coming out at 2,70,000, right? So the new contract is for 2,70,000. Now let's discuss the updation of existing contract. Growth Limited enters into an arrangement with the customer for infra outsourcing deal, right? Based on its experience, Growth Limited determines that customizing the infrastructure will take approximately 200 hours in total to complete the project and charges 150 per hour, right? So Growth Limited is a company which enters into an arrangement with the customer for infrastructure outsourcing deal. Based on its experience, Growth Limited determines that customizing the infra will take approximately 200 hours in total to complete the project and charges 150 rupees per hour, right? And charges 150 rupees per hour. So friends, this company is customizing the infrastructure, right? Is customizing the infrastructure. And they have considered 200 hours in total, and they have considered a cost of 150 per hour, which they are going to charge. But after incurring 100 hours of time, this Growth Limited and the customer agree to change an aspect of the project, right? And increases the estimate of labor hours by 50 hours. So instead of 200, now they are considering 250 hours. And the additional 50 hours at the rate of 100 rupees per hour only, right? And what is the objective? Objective is only customize the infrastructure, customizing the infrastructure, right? Determine how contract modification will be accounted for as per Ind AS 115. So friends, when they have completed 100 hours, the work was in progress. They were constructing something, right? And when the scope has been increased by 50 hours, of course, so whatever have been delivered before modification does not have any utility. If something which is under construction does not have any utility, right? So you cannot say that before construction or which is under construction, it is giving you a different benefit, different utility, different uses. Answer is no, right? So this is not a case of termination of existing contract and creation of new contract. This is a case of revision of existing contract. This is a case of revision of existing contract. Are you getting me? So termination of existing contract and creation of new contract will generally happen when there is additional goods and services which is having a individual use, okay, or the services which is having its use, okay. So this is the benefit of your termination of contract and creation of a new contract. But in this case, the services provided before modification and services provided after modification cannot be distinguished from the benefit perspective. And hence, if you will see that, considering that the remaining goods and services are not distinct, the modification will be accounted for on cumulative catch-up basis as given below. The initial contract amount was 200 and the rate was 150. Modification in the contract is 50, right? Modification in the contract is 50 at the 100 rupees rate. So total hour is 250. The total price is 35,000. The revised rate will become 140. Revenue to be recognized 100 hours multiplied by 140, 14,000. But revenue already recognized 100 multiplied by 150, 15,000. It means there would be an adjustment in revenue by 1,000 rupees, right? By 1,000 rupees. So by 1,000 rupees, a liability needs to be created, right? Why? Because the additional revenue has already been recognized. So how much liability needs to be created? By 1,000 rupees. Okay. Is it clear, guys? So I have taken a lot of examples from real life examples, from layman examples, and I've also covered 3 case studies, one for a new contract, second for a termination of existing contract and creation of new contract, third for revision in the existing contract. So friends, I have covered step 1, combination of contract and contract modification in detail with all the example which I have taken in my earlier videos as well, right? So it's 8:37 now. Let's have a 10 minutes break. Okay? Then we will start at 8:47. Okay. step one completely, and we have also covered combination of contract and the impact of accounting on contract modification. Soham is asking, instead of adjustment in illustration number 9, can't we take adjustment, can't we take the impact in remaining 150 hours? Soham, so basically, if you will see, the impact will be taken in the next 150 hours only, right? Because you have already recognized the revenue, right? So what you will do, you will already recognize the revenue of 1 lakh 50. You have already recognized the revenue of 15,000. Okay. So now this 1,000 reversal will be happen from the subsequent revenue only, right? So when I'm saying adjustment in revenue, if it is within a year, for example, the contract has been modified within the reporting period of within the year. In that case, revenue has to be adjusted in the same year. But for example, this modification happens after closure of the financial year or after approval. In that case, of course, this revenue has to be adjusted subsequently from the subsequent revenue only, right? Yeah. So now coming to the performance obligation. So friends, performance obligation is very, very, very important term, right? And the revenue has to be recognized on the basis of performance obligation. In my helicopter view example, when a vendor or when a shopkeeper was committed or was promised to perform, to sell air condition unit, to sell stabilizer, to provide installation service, and to provide maintenance service, right? If I talk about the commitment, if I talk about the promises, how many promises are there in this particular transaction? 4 promises are there. 1, selling an AC unit. 2nd, stabilizer. 3rd, installation service. 4th, maintenance service, right? These 4 are the different 4 performance obligation. Now the question arises whether these will be considered in the 4 different performance obligation or whether these will be considered as a single performance obligation, right? So friends, the performance obligation is the subject matter on the basis of which revenue is going to be recognized, right? And when revenue will be recognized? Revenue will be recognized when performance obligation will be satisfied. When performance obligation will be considered as satisfied? Performance obligation will be considered as satisfied when the control will be transferred to the customer. When the customer will be able to use the goods at their own or with the help of readily available resources, right? For example, why we are saying that this installation service is a separate performance obligation. If I have purchased an air condition from a electronic shop or from a vendor, right? Let's say O General AC, I have purchased last year, right? And I have asked because these companies were the company was saying that I will be able to provide this installation service only after 3 days, and due to some guest, I was needing that service on an immediate basis. I mean to the same day. So I call my technician from the market and I have get it installed. What does it mean? It means that I, as a customer, was able to use the product, that air condition, with the help of the readily available resources which is available in the market, right? And hence the delivery, or let's say the sale of air condition unit, the stabilizer, the installation service is considered as a separate performance obligation, right? So friends, you have to see the substance. What is the substance of this transaction? Whether the next performance obligation is depending on the first performance obligation, is it interdependent or is it a separate performance obligation? In case of Amazon, why Amazon is only recognizing a revenue on the delivery of the goods? Why? Please tell me. Because till the time Amazon will not deliver the goods, you will not be able to use that goods as a customer. The control has not been passed on to you. The control has not been passed to you. The control is lying with the Amazon and their associate partners only, right? Because and at the same time, if you have purchased a television or purchased a refrigerator, a fridge from a particular supplier from the local market, from a electronic outlet, and he is not providing any delivery services, in that case, whenever you have purchased, you have paid and he has billed to you. So in that case, he will recognize a revenue because his performance obligation has been met. But if the supplier is saying that I will deliver at your premises, right? In that case, the performance obligation will be satisfied when the supplier will deliver at that premises, and at that point of time, the revenue has to be recognized. So in that case, the delivery and the supply of the goods, these two are considered as a single performance obligation. In the third example, when you are buying a refrigerator from Amazon, you are not able to know whether these goods will be delivered from Maharashtra or Nagpur, from where it has to be delivered or transported, right? So in this case, you can't take the delivery, right? You can't arrange the delivery at your own, right? So, and hence, selling a goods and delivering the goods, of course, these are the two different activities. Amazon is buying a goods from a different vendor, and Amazon has a different delivery partner for delivering the goods. So if I talk about Amazon from the cost side, the seller is different and the delivery partner is different, right? These are the two different activities. But from the revenue recognition perspective, but from the customer perspective, the Amazon will recognize revenue only when the goods are delivered to the premises of the customer, right? And hence these two activities are not two performance obligations. These two activities are the single performance obligation, right? Coming to the example of car and services, let me tell you, I'm using Swift car, okay? And in the initial 2-3 years, I get the service of the car from the same service center from which I have bought the car, right? But since last 6-7 years, I'm just getting the service done from the local service provider, right? So there is a mechanic, there is a workshop which is just near to my premises, near to my house. And I used to get the service done from that local service provider. And he's charging a very less amount in comparison to the money which is charged by these service centers, right? So the point is, this service, this maintenance service is kind of a service which a customer can avail from the readily available resources which is there in the market, or the customer can use it their own as well. Like I've told you that my father-in-law is replacing their, air filter, oil filter, diesel filter at their own, right? Because he is aware that how these things has to be replaced, right? So friends, performance obligation depends upon the substance of the transaction, depends upon the terms and condition. Arrangement depends on the arrangement as well, right? So it depends on the business practices as well, right? When you buy any electronic item, so last year when I purchased a juicer, mixer and grinder of Morphy Richards, right? So there is a free installation and there is a free demo service which is provided by the company, right? So the company representative will come and he will tell you that how this product will work, right? So and you can use that product. Now the point is, when the Morphy Richards is selling these mixers and they are providing free installation, and installation is nothing, just you have to put the jar on the machine, you have to just plug in that wire and you have to just start and it will start functioning, right? And demo is nothing. He will tell you what is a juicer, what is a mixer, what is a grinder, right? How much till what level you have to fill the product in the jar. Although the indication was also there, but he will just tell you these 2-3 things. It is just a kind of a khana purti. It is just a formality. Okay. So guys, even though, let me tell you, we have not called for any installation, we have not called for any demo service, and the moment we have purchased the mixer, juicer and grinder, so it reaches to our house and my wife has started using it immediately. He just unpacked the box, he put the jar on the machine, on the mixer grinder, and he has just cleaned up and plug in and just start playing that mixer. Okay. So the point is whether the company will consider this item. I mean to say, whether the company will recognize the revenue only when this demo service or installation service will completed, or the company will recognize revenue when the goods have been sold out. So the company has to recognize the revenue when the goods have been sold out, right? When the goods have been sold out. It is not a single performance obligation. It is a multiple performance obligation. And one of the performance obligation is sale of juicer mixer grinder, right? And hence, when the company will sell the goods, the company has to recognize the revenue relating to the sale of goods. I hope you guys have understood this. Yeah. I hope you have understood this. Is it clear? Is it clear, guys? Is it clear? Right. So let me go back to my Excel sheet and we'll discuss some examples there again. And then I'll come back to the PPT and I'll discuss a lot of examples for that. So the second step is identify the performance obligation, and it is very important because when the performance obligation will be satisfied, then only revenue will be recognized, right? And let me show you one of the annual report. So this is the annual report of Hindalco Industries Limited. I hope this annual report is visible, guys. I hope this annual report is visible. So I will show you the accounting policy of annual report, right? Of Hindalco Industries Limited. I will show you the accounting policy. You guys are CA final student. You should have expert knowledge of Ind AS. And let me tell you, whenever you will qualify CA and you will go to the industry or you will go to the consulting, then people will ask you, right, regarding the practical application of these Ind AS. So you have to be, in your learning agenda, you should refer some annual reports, right? Revenue recognition accounting policy. The group derives revenue principally from sale of hydrate, specialty aluminium, and aluminium value-added products, de-ammonium phosphate, copper, precious metal, gold and silver, and other materials. Okay, so this is the product of this group. This is the product. Okay. Now, what is their accounting policy as far as revenue recognition is concerned? Just a minute. Just wait for a minute. Oh, accounting policy on revenue. Yeah, page number 150. Okay. Yeah. Yes. Please look at this paragraph. The group recognizes revenue. When the group recognizes revenue, the group recognizes revenue when it satisfies a performance obligation. Means when it completes a performance obligation in accordance with the contract with the customer. In accordance with the contract with the customer, right? This is achieved when control of the product has been transferred to the customer. When the control of the product has been transferred to the customer, which is generally determined when legal title, physical possession, risk, loss and rewards of the ownership pass to the customer and the group has the present right to payment, all of which occurs at a point in time upon shipment or delivery of the product, right? The group considers shipping and handling activities as cost to fulfill the promise to transfer the related product, and as customer payments for shipping and handling cost are recorded as a component of revenue. In situations where revenue is recognized on shipment of goods, shipping and handling services are treated as a distinct separate performance obligation, and the group recognizes revenue for such services when the performance obligation is completed. So friends, what is written in the second paragraph? You remember, I have told you, when you have asked Vijay Sales, Chroma or Reliance Digital to deliver the goods, they have said that if we need to deliver the goods, then you have to pay us 500 rupees extra because we are not responsible for the delivery, right? So they will recognizing the sale transaction when the sale will happen, right? Not at the time of delivery, when the sale will happen. And they will recognize the revenue from the delivery of the goods when the delivery will happen. Okay. So same thing is written here. In a situation where revenue is recognized on shipment of goods, shipping and handling services are treated as a distinct separate performance obligation, and the group recognizes revenue for shipping and delivery when the performance obligation is completed. Are you getting me? Are you getting me, friends? Is it clear? Is it clear? Is it clear or not clear? Yeah. Great. Clear. Okay. So Manini is asking, sir, if sale is on 0% EMI basis, when we will recognize revenue? Is there really no interest credited? Treatment of interest? Manini, first of all, you need to understand. The sale has already been happened, right? Sale has already been happened. The only thing is the money has not been received upfront. The money will be received into some installments, right? So what accounting entry you need to pass? You need to pass an accounting entry customer or a debtor account debit to revenue account. So you are talking about the collection adjustment. You are talking about the arrangement of collection. Okay. Clear? Soham is asking, sir, but shipping and sales are part of the same contract. So how can one recognize only at the time of sale and not at the time of delivery? Soham, if it is a single performance obligation, again, please try to understand. If it is a single performance obligation, in that case, you have to recognize revenue when the performance obligation will get satisfied. But if it is a multiple performance obligation, for example, for Amazon, selling the goods and delivering the goods are the single performance obligation, right? Because until and unless I will receive the goods, I will not get the benefit. But for a normal supplier where he is providing you different services, either you can take the delivery services from that supplier, or you can take the delivery services at your own, right? In that case, it will be treated as a separate performance obligation, and in that case, the revenue relating to those performance obligation will be recognized only when those performance obligation will be satisfied. You remember the helicopter view example? When we have identified the performance obligation, we have determined the transaction price, then we have allocated the transaction price to the performance obligation, then we have recognized the revenue for those performance obligation, right? Is it clear? Good. So what is a performance obligation? Performance obligation is a different goods or services, or a series of different goods or services which is substantially same and have the same pattern of transfer. So friend, first it is talking about goods or services. The second, it is talking about the series of goods and services. First, it is talking about the goods and services. The second, it is talking about the series of goods and services, right? So how does it mean, series of goods and services? Performance obligation is either a different goods or services, a distinct goods or services, or a series of different goods or services which is substantially same and have same pattern of transfer. For example, newspaper agencies. So newspaper agencies are delivering the newspaper in the premises of the customer every day, right? They are selling newspapers, and they are delivering newspaper to the premises of the customer every day. Am I right? They are delivering every day, and every newspaper is a different newspaper. The news which you have read yesterday, probably you will not find the news tomorrow, right? Probably one day when you hear about the news of corona, you will feel very sad. But tomorrow, when you will read the newspaper of Neeraj Arora winning the Olympics, you will be very happy. Virat Kohli won the first T20 World Cup match against Pakistan. You will be very happy. right? So this Virat Kohli has played very well and India has won against Pakistan. This is not a daily news, right? So every day you will get a different news. Every day your emotions would be different. The news would be different, right? The utility would be different. Every day is a new day. So friends, in a way, when this newspaper agency is delivering newspaper over the year 365 newspaper, every newspaper is a different newspaper. So it is a series. It is a series of different goods or services, which is substantially same. So which is substantially same means every day you are getting a newspaper, 6-page newspaper, 10-page newspaper, which will provide you a news and have the same pattern of transfer. Have the same pattern of transfer, right? So either performance obligation is a different goods or services, or it is a series of different goods or services which is substantially same and have the same pattern of transfer. Sir, in this case, for a newspaper agencies, if every day newspaper agency is delivering a newspaper every day, whether it is a single performance obligation or 365 performance obligation over the year. Tell me, friends, whether it is a single performance obligation or 365 performance obligation over the year. Yeah, tell me. Yes, Rohan, you're right. It is 365 performance obligation. It is not a single performance obligation, right, Manini? It is 365 performance obligation. Why? 365 different goods will be delivered every day. 365 different goods will be delivered every day. But do you think your newspaper vendor will ask money every day? Do you think your newspaper vendor will ask money every day? Your newspaper vendor will raise your invoice for a particular month, right? For a particular month, for 1 month, right? And customer are paying on a monthly basis or a quarterly basis or a yearly basis, whatever it may be. So the point is, whenever there is series of distinct goods or services which is substantially same and have the same pattern of transfer, in that case, those performance obligation needs to be the revenue relating to those performance obligation has to be recognized on some reasonable or some consistent basis, like monthly basis, right? So what could be a performance obligation? Performance obligation could be either a distinct goods or services or a series of different goods or services which is substantially same and have the same pattern of transfer, right? Is it clear, friends? Is it clear? I hope my Excel file is visible to all of you. Yeah. Now the question arises, when the goods or services are considered as distinct, when the goods or services are considered as distinct, right? When the goods or services are considered as distinct, different, when? So friends, in standard, there are two criteria which are given. Please, and I would request each one of you to please prepare notes as well. In the standard, two criteria are given, right? The first criteria is at goods or services level. Goods or services level, right? The first criteria is given at goods or services level, where customer can get the benefit of the goods and services at their own. Customer can get the benefit of the goods and services at their own, or with the help of readily available resources, right? Example, let me take an example. So let me take an example of let's say Reliance Digital dealer sales a refrigerator. It also provides delivery service on the request of customer. The customer may arrange delivery at their own as well, right? In this case, if we look at the activity, One is sale of refrigerator. Another one is delivery. So friends, there are two activities, right? There are two performance obligations. So first of all, to discuss whether it is both are single or it is different performance obligation. First of all, tell me if the Reliance Digital has sell the goods to the customer, whether the customer can get the benefit of the goods and services at their own or with the help of the readily available resources. And let me tell you, if I talk about 4 years back, my father-in-law is having a Tata Safari car. And when they purchase a refrigerator, they put their refrigerator in their car only and get the delivery at their own, right? Or I can call some, tempo from outside vendor, and I can get the delivery at my own, right? I can arrange the delivery at my own. So in this case, the customer can get the benefit of the refrigerator at their own or with the help of the readily available resources. So in this case, it will be considered that the goods and services are distinct. And when the goods and services are distinct, it will be considered as a separate performance obligation. So the first one is performance obligation 1, and the second one is performance obligation 2. And the second one is performance obligation 2, right? PO1 and PO2, performance obligation 1 and performance obligation 2. Understood? So friends, in this case, the sale of refrigerator revenue will be recognized when the refrigerator will be sold, and the revenue relating to delivery will be recognized only when the Reliance Digital is providing you the delivery and charging for the delivery, and it is a separate performance obligation, right? Are you getting me? But in case of Amazon, same work is done by Amazon as well, right? Same work is done by Amazon. Amazon is again selling a refrigerator and providing a delivery, right? And Amazon sold a refrigerator on, let's say, 29th March 22, and Amazon has delivered this refrigerator on 5th April 2022. Okay. Now the question arises. Whether this two things, sale of refrigerator and delivery of refrigerator, whether these are the two separate performance obligation or these are the two single performance obligation. Now you need to look at whether the customer can get the benefit of the goods and services at their own or with the help of the readily available resources. Answer is no. You are not aware whether this refrigerator is coming from Nagpur, coming from Maharashtra, coming from Hyderabad, coming from Telangana. You're not aware, right? So they are arranging from the different supplier. They are arranging the product and they are delivering the product at your premises. And that is why the goods and services, you cannot facilitate the delivery at your own. If you would be able to facilitate the delivery at your own, in that case, it would be a different performance obligation. But in this case, it would be a single performance obligation. It would be a single performance obligation, right? It would be a PO1, single performance obligation. Guys, I hope it is clear to all of you now. It is clear to all of you. Sumit, you will get your answer. Don't worry. I will cover that. Okay. I hope it is clear to all of you, friends. Third example, again. Let me take the third example of laptop. So from Amazon, you want to buy a laptop. And let me take an example of Flipkart. Right. I'm not a promoter of Amazon or any website. Let me take an example of Flipkart here. So, friends, when you buy a laptop or a computer from these online sites or e-commerce sites, they give you option to choose the parts at your own. For example, you want to buy a laptop, right? And you just selected that I want a motherboard of Microsoft, right? Then you selected I want a processor of, let's say, AMD Ryzen. I need a processor. I need a screen of Toshiba, right? I need a camera of Hazelblade, right? You have said that I need a keyboard of Portronics, right? So you have just ticked which company's product you want to take or you want to purchase for your laptop, right? So friends, You have selected those products. You want to buy a laptop and you want that laptop was having a configuration or product which belongs to these companies or these brands. Okay. And you want a mic in that laptop which belongs to Boya, right? So Boya is the company which provide the mic. So friends, first Amazon is arranging these parts from different companies because you have asked the processor from AMD Ryzen, you have asked the motherboard from Microsoft, and you have asked the keypad from Portronics, LCD from Toshiba, and mic from Boya, and camera from Hasselblad, right? So first of all, Flipkart is selling the parts for laptop, for computer, right? Second, first Flipkart is arranging and selling. The second one is delivering of those parts. And the third one is assembling. Right? So you are not only purchasing these parts, you are purchasing a laptop, and in that laptop, the laptop should having these kind of configuration and this kind of product, right? And this option is given by Amazon or Flipkart. Now the question arises, when Flipkart has to recognize the revenue, when Flipkart will sell revenue, when Flipkart will sell the parts to the customer at that point of time, or when the part has been delivered to the customer at that point of time, or when the part has been assembled and this laptop has to be used as a laptop, right? When the customer will have the benefit of the laptop as a laptop, when the customer will be able to enjoy the fruit of the assembled part as a laptop. So when this revenue is going to be recognized. Now, first question, when the Flipkart has sold goods, can the customer get the benefit of the goods and services at his own or with the help of the readily available resources? Answer is no. So the goods will reach to the customer only when the goods are delivered, right? Now, if I'm talking about this particular thing, what is your expectation? Your expectation is to buy those parts, or your expectation is to have a laptop which is having these parts. Your expectation is to buy a laptop which is having such configuration, right? So in this case, this requires a high degree of customization or integration for joining these parts and making these parts as a laptop, right? Second, would you like to call for a different mechanic for assembling, or would you like to Amazon or let's say company related mechanic for the assembling? Of course, company related mechanic for the assembling. Why? Because if something wrong goes, if something goes south, then I will get these things returned to the Amazon, right? So friends, in this particular case, I would say assembling different part will lead a high level of integration. And for making it as a laptop, and the customer expectation is not to buy these parts. The customer expectation is to buy a laptop which is having such parts, right? So in this case, these three obligations are not distinct. These three obligations are not different. These three obligations are the single performance obligation. This is a single performance obligation. So how many performance obligations are there? One performance obligation is there. I hope it is clear to all of you. I have taken three examples here. I hope it is clear to all of you. Right? So friends, when goods and services are considered as a distinct, goods and services are considered as a distinct, right? When the customer can get the benefit of the goods and services at their own or with the help of the readily available resources. So in the second example, you can ask, sir, the assembling can be happen by some different computer mechanic as well. And if I am a computer software, even I can do the assembling. Then why you have considered that performance obligation as a single performance obligation? So just wait for 2 minutes. So friends, I have told you that for considering or evaluating whether the goods and services are different, it is distinct. So first you need to see at goods or service level. Then you need to see at contract level. the entire contract, at entire contract level. And what does it say? It says that first, customer can get the benefit of the goods and services at their own or with the help of the readily available resources. And there is not or, that is and. What is and? The and is the goods and services are separately identifiable in the contract. The goods and services are separately identifiable in the contract. Sir, when can you say that goods and services are separately identifiable in the contract? When can you say that? The goods and services are considered as separately identifiable in the contract. Goods and services are considered as separately identifiable in the contract when three conditions will be satisfied. When three conditions will be satisfied. Goods and services are considered as separately identified in the contract if there should not be significant integration required. Integration. There should not be a significant integration. Or B. There should not be a significant modification or customization required. There should not be significant modification or customization which is required. Or there should not be significant modification or customization which is required. Or the activities should not be highly interdependent. Or the activities should not be highly interdependent. Friends, please tell me, in my laptop example, although you can say that, sir, assembling even I can do, I am a computer software, or assembling services I can avail from the computer softwares, from the computer engineers as well, right? I am a software engineer, so I can do that, or some other software engineer can do that, right? But at a contract level, the contract was for acquiring a laptop. The contract was not to acquire a laptop parts. So don't you think from the contract level, this activity is highly interdependent? The motherboard, the mic, the keypad, the processor, this is a highly interdependent activity. Don't you think a significant amount of integration is required? Don't you think? Yes, it is required. So at a contract level, the goods and services are not separately identifiable in the contract. Why? There is a high degree of integration, there is a high degree of interdependency, right? And hence, these three performance obligation has been considered as a single performance obligation, right? This assembling has not been considered separately. It is a one performance obligation. Is it clear? Do you remember? I have taken an example of institute study material of that the supplier S has sold a software to customer relationship management software to customer B. You remember? And after 3 days, he has agreed to provide a consultancy services, because without providing consultancy services, that product will not be usable for that company, and it was requiring a high degree of customization. You remember that example? So in that example, do you remember we have considered the sale of software and providing a consultancy service as a single performance obligation? Why? Because as per the contract, although one of you have told me, sir, probably this consultancy services can be provided by some different software agencies as well. Yes, but if you will see at a contract level, since the contract has happened with this particular agency only, so whether this agency will consider these two activities as a two performance obligation or these two activities as a single performance obligation. So as per the contract, it is a single performance obligation. Why? Because this consultancy service will require a high degree of customization in the software. And that is why selling a software and providing a consultancy service is a single performance obligation. right? So the revenue relating to sale of software will be recognized when the service will be provided. I hope it is clear to all of you, friends. I hope it is clear to all of you. Sumit is asking, in case of Amazon, if there is an option to pick up from Amazon and Amazon allowed that. In that case, the revenue has to be recognized when the goods will reaches the warehouse, right? Srishti is asking for significant integration means. Significant integration means, Srishti, means there are a lot of changes in the existing goods and services. Like for example, if you have bought a TV, if you have bought a TV, so you just need to do some, you drill some two holes, right? And then just you need to hang the TV, right? It does not require a significant degree of modification, customization, or integration. But if you're buying a hardware and software, and for using it as a one product, you need to integrate those hardware and software. In this case, it will be considered as a significant integration. Or like a construction activity. In construction activity, you have given a contract to a contractor, right? He will do the electric work, he will do the plumbing work, he will do the flooring work, he will do the civil work. So everything requires a significant degree of integration, and hence it is considered as a single contract, right? So friends, let's move on to the presentation and let's discuss a lot of real life examples, right? So performance obligation is a promise to transfer to customer either a different goods or services or a series of different goods or services which are substantially the same and have the same pattern of transfer. You have to determine the performance obligation. So how this performance obligation is determined? It is depending on the customary business practices and the contractual terms, right? So two-step model we have discussed, one from the goods and services level. The second one is at a contract level. So at goods and services level, you need to see that whether customer can get the benefit from the individual goods or service at its own, like my father-in-law is changing the air filter, oil filter at its own, or you can get the services of the car done from the different vendors, right? There are a lot of workshops which provided the services of car, right? With the readily available resources. Step two, you have to see whether the goods and services is different in the context of the entire contract. When I'm saying a contract, whether it is requiring a high degree of integration, whether it is requiring a high degree of modification, whether it is requiring a high degree of customization, or it is interdependent. So you need to look at those aspects as well. If answer is yes, then of course, those multiple activity will form a single performance obligation. Yeah. Clear? Is it clear? Yes. So let's discuss example number one. Entity enters into a contract to manufacture and install customized equipment and provide maintenance service for a 5-year period. So what is a contract? Contract to manufacture and install and provide maintenance service for a 5-year period. So one, manufacture and sell the software, install the software, and 5-year period warranty. 3 activities are there. I'm not saying performance obligation. I am saying 3 activities. So let me read further. Installation services includes the integration of multiple pieces of equipment. It is not a simple installation, right? It is not an air conditioned refrigerator or TV installation. It includes the integration of multiple pieces of equipment at the customer facility only in order for the equipment to operate as a single unit, right? Like that laptop example, like that bicycle example, right? So the multiple pieces has to be joined and then it has to be installed in the customer facility so that the customer facility means customer premises, so that the customer will be able to operate that item as a single unit. Okay. And of course, equipment cannot operate without installation. It is not plug and play. It is not plug and play. Equipment cannot operate without installation. So friends, in the first 3 para, we got 3 information. First, there is a manufacture and sale, there is an installation, and there is a 5-year period warranty. Warranty, I mean to say maintenance services. Second tells you that the installation is not straightforward, not simple. It requires integration of multiple pieces of equipment. Third, equipment cannot operate without installation. Customer does not have any use till the time installation gets over. Entity sells equipment and installation services together. Entity normally sells the equipment and installation services together. Does not sell installation separately. Entity does not only provide installation, it generally provides installation along with the equipment. But the other vendor can also provide the installation service. You can call the vendor from the urban company or from the market and he will get the installation done. The maintenance services are always sold separately. So maintenance service is a separate performance obligation, right? It is always sold separately. But as far as installation is concerned, two information is given. One, this installation will require a high degree of integration. Second, other vendor can also provide installation. So let me please evaluate how many performance obligations are there in this contract. So let's evaluate this with the help of two model. What was the two model? One, you need to see that whether the goods and services, whether these three items are different. So how will you say that these three items are different? First, you need to look at from the perspective of goods and services level. So you need to see whether customer can get the benefit at its own or with the help of the readily available resources. So equipment, right? Goods cannot be used without installation, but customer can obtain the installation from another source, right? So the customer has purchased the equipment, and if customer wants, he can call the outside mechanic. He can call the vendor or he can call the mechanic from outside local market and he can get the installation done. It means the customer can get the benefit of goods and services. Customer can get the benefit of equipment either at its own or with the help of readily available resources, right? So what does it mean? It means the goods can be used with the help of other sources. So it means the goods is distinct. Goods is distinct, right? Is it clear? But goods are distinct at a goods or services level. But if I'm talking from the contract level, if I'm talking about in the context of the contract, whether the goods are distinct, whether the goods and installation are distinct. So friends, please tell me, from the contract level, the goods are considered as a separately identifiable in the contract only when three conditions will be satisfied. Not all condition, either or. The equipment or the goods will not require a high degree of integration, customization, modification, or interdependency. But in this case, in the question, it is given that the installation will require a high degree of integration. And please tell me, if something which require high degree of integration, what will you prefer? As a contract, what will you prefer? Whether you will call the outside mechanic or you will call the company's mechanic. Of course, it is preferable to call the company's mechanic. So from the context of the contract, this goods and services, I mean to say equipment and installation is not distinct. It is not distinct. It is single performance obligation. Equipment and installation are highly interrelated. Significant customization is required during installation. Goods is not distinct on its own because it must be combined with installation. Again, coming to the installation services, at an individual level, installation can be provided by multiple vendors, so installation service is distinct. But from the contract level, equipment and installation are not distinct from one another. So from the contract level, this is a single performance obligation. But at a goods level, this is a different performance obligation. So first you need to see at a goods level, then you need to see at a contract. So at a contract level, and the word is and. So and a contract level, it is a single performance obligation, right? Coming to the maintenance, at a goods and services level, individual level, services have a distinct function because they are sold separately. At a contract level, again, services are not highly interrelated. No integration, modification, customization required. Services are individually distinct. So this is a second performance obligation. So in this contract, two performance obligations are there. One, equipment and installation, because they are not distinct within the context of the contract. The second one is maintenance services, right? So friends, you need to look at from the terms and condition which is given in the contract. You need to see from the substance of the contract, not from the form of the contract, right? I hope it is clear to all of you. I hope it is clear to all of you guys. Manini is asking, separate revenue recognition principle for separate customer, or it should be same for all customer? Manini, you need to see the contract with the customer, right? If the contract has been drafted differently for the different customers, in that case, The revenue has to be recognized accordingly, because revenue has to be recognized on the satisfaction of performance obligation. And what is performance obligation? Performance obligation is a promised goods or services. So what has been promised, you need to see that. Right? Right, Manini? Great. So let's take another example. So guys, I have many example from the institute study material as well as my real life examples, right? A construction services company enters into a contract with a customer to build a water purification plant. Okay. So this construction services company has entered to a contract with the customer to build a plant. The company is responsible for all aspects of the plant, including overall project management, engineering and design services, site preparation, physical construction, procurement of pumps and equipment for measuring and testing flow volumes and water quality, and the integration of all components. Determine whether the company has a single performance obligation or a multiple performance obligation under the contract. So friends, you are a customer. Sumit is a customer and Sumit wants to install a water purification plant. It's a big plant, okay? And Sumit has contracted with the construction services led by Srishti. Okay. So Sumit wants to have a complete water purification plant, and Srishti's company is responsible for all aspects of the plant, including overall project management, engineering services, right? Architectural services, site preparation, physical construction, civil work, procurement of pumps and equipment for measuring and testing flow volumes, and water quality and the integration of all components. So friends, probably the architectural services could be procured from outside vendor as well. The construction services could be procured from outside vendor as well, right? Procurement of pumps can be, of course, from the ICER or from some other vendors, right? So friends, probably these goods and services are distinct at their own. I mean to say, at the individual level, these goods and services are distinct. So whether Srishti's company, whether this construction services company has to recognize the revenue when they are delivering these items in parts, or they need to recognize the revenue when they will hand over this entire plant to the Sumit, right? So I mean to say, whether it is a multiple performance obligation or it is a single performance obligation. So friends, what is the expectation out of this contract? What is the expectation of Sumit? The expectation of Sumit is to have all these parts, or is to have an entire assembled water purification plant. The expectation of Sumit is to have an entire water purification plant. So probably at an individual level, Sumit can use those pumps, those other equipments with the help of the other vendor or the available resources. But as far as the contract is concerned, the substance of the contract is to provide this entire services as a whole, and this will require a high degree of integration, high degree of assembling, modification, customization, and a lot of interdependency is there, right? And hence it is not a multiple performance obligation, it is a single performance obligation, right? Very good, very good. I got 9 answers and all the 9 answers are correct. Very good. Thank you, Srishti. Next example, illustration number 11. An entity provides broadband services to its customer along with the voice call services, right? Like Airtel. Airtel is providing a voice call services. Airtel is providing a broadband services. So I am having a broadband of Airtel at my home, right? They have given me modem also, right? Customer buys modem from the entity. However, customer can also get the connection from the entity and modem from any other vendor, right? So when I before COVID in March 2020, I bought this internet connection from Airtel. So what Airtel did? So Airtel just pulled the wire till my place, right? And they have also given me a modem, right? I bought the modem from Airtel. But when I looked at the modem, I have seen that the modem was not manufactured by Airtel. The modem belongs to Nokia or Huawei. So Nokia or Huawei, right? So it means Airtel is purchasing the modem from Nokia and Huawei, and then it is selling to its customers. So even if I want to purchase modem directly from Nokia or Huawei, I can purchase and I can use that. Okay. Like what my brother did, he was having an old modem, right? So he just uh, he just spoke with the Airtel guys and told that you need to just pull the wire till my place, and I will plug that wire into the modem and it will start working, right? So he has used the old modem only, he has not purchased the modem. So either customer buys modem from the entity, however, customer can also get the connection from the entity and modem from any other vendor. The installation activity requires limited effort and the cost involved is almost insignificant, right? So installation activity is insignificant. If there is a modem, there is a wire, just you need to plug and play it. It's as simple as that. It has various plans where it provides either broadband services or voice call services or both. Are the performance obligation under the contract distinct? So you need to tell me whether the performance obligation under the contract distinct means whether in this contract there are different performance obligations. How many performance obligations are there and what are the performance obligations? Please tell me. How many activities are there? Modem, sale of modem is there. Broadband services is there. Voice call services is there. Installation is there. But installation is pretty simple. If I have the modem and I have the wire, I can plug and play. As simple as that. So customer can use the goods and services at their own. So the installation is nothing, right? It is insignificant. So how many services are there, guys? Yes, you are right, Sumit. There are 3 performance obligations. Christy, there are 3 performance obligations. 1, sale of modem. The second one is broadband services. And the third one is voice call services. For example, I'm only using the broadband service. I'm not using the voice call services. Okay. So entity promised to provide goods and services is distinct if the customer can benefit from the goods and services either at its own or together with the readily available resources, and entities promised to transfer the goods or service to the customer. It's separately identifiable from the perspective of the contract. For broadband and voice call services, broadband and voice services are separately identifiable from other promises. As company has various plans to provide the 2 services separately. The company is already providing a voice call separately, broadband service separately. These 2 services are not dependent or not interrelated. Okay. For example, in the last 2 years, I'm only using broadband services. Although I have got the voice call services as well, but I'm only using the broadband service. Also, the customer can benefit on its own from the services received. For sale of modem, customer can either buy the modem from entity or the third party. No significant customization or modification is required. And hence, based on the evaluation, there are 3 separate performance obligations: broadband, voice call, and modem. These 3 are the different performance obligation, right? Another example. Contractor enters into a contract to design and build a house for a new homeowner. Contractor is responsible for the overall management, including architectural design, site preparation, construction, plumbing, electrical, finished carpentry. Contractor regularly sells these goods and services individually to customers. So contractor generally also provide only architectural service to one of their customer. Contractor also provides only electrical and plumbing service to one of their customer, right? Like one of the student has asked, sir, whether the revenue recognition will be considered as the same for all the customer. Answer is no. It has to be as per the contract, right? So friends, in this case, the contractor enters into customer to design and build a house for a new homeowner. So from the concept of the contract, if you will talk from the services level or goods level, probably you will find that the customer can take the benefit of the delivered goods and services at their own or with the help of the readily available resources. Like when I have constructed my house, I have taken the architectural services from a different agency. I have taken the civil services from a different agency, right? Civil work. But as far as the contract is concerned, this construction of house will require a high degree of integration, high degree of customization, modification, interdependency is there. So how many performance obligations are there in the contract? In this contract, how many? Multiple or single? Single performance obligation. From the perspective of the contract, there is a single performance obligation. Are you agree or not agree? It is just like water purification plant, right? Yes. There is only one performance obligation from the perspective of contract. Third example, although it is fifth example, not third, right? Software company enters into a contract with a customer to provide a perpetual software license. Installation service. So software company enters into contract with a customer to provide a software license, installation service, and 3 years of post-contract customer support, right? And 3 years of customer support. The installation service requires the entity to configure certain aspect of the software, but do not significantly modify the software. So for installation, you need to, configure certain aspect. If you have downloaded any software, you must have seen that when you have to run, then the running will be complete. Then you have to accept the license agreement. Then you have to download and save it, and then it will be completed. The installation will be completed, right? So friends, the installation service requires the entity to configure certain aspect of the software, but do not significantly modify the software. These services do not require any specialized knowledge. Anyone can run the Windows program or any other program. And other sophisticated software technician could perform similar services. So other software providers are there, technicians are there, and this does not require any specialized knowledge. Running or installing will not require any specialized knowledge. The software does not require the upgrades and telephone support in order for it to remain functional, right? Although 3-year post-contract customer support is there, right? But even though its upgrade and telephone support will not be there, still the software will remain functional. The software will remain functional. It means the sale of software, the installation, and the customer support. These are not interdependent, right? These are not interdependent. Second, if the customer will get the license, it can get installed at its own or with the help of the available technician. The customer can get the contract, get the customer support from the other vendor, as well as even the customer support will not be there. Still the software will remain functional, right? Like in our mobile phones, there are a lot of customer upgrades. There are a lot of upgrades, software support, right? So at times I don't used to download those software upgrades, right? At times I used to download, at times I don't used to download. Still, my mobile remain functional, right? So how many performance obligations are there in the contract? There are 3 performance obligations in this contract, right? Performance obligation are license, installation, and unspecified future upgrade and telephone support. The customer can benefit from the software delivered first because it is functional without the installation service, unspecified future upgrade, and telephone support. The customer can benefit from the subsequent installation service, unspecified future upgrade, and telephone support together with the software, which it has already obtained. Software company concludes that each goods and service is separately identifiable because the installation service, unspecified future upgrade, and telephone support do not significantly modify or customize the software. Additionally, the software and services are not being integrated into the output that the customer has contracted to receive, right? Thank you, Aniket. Thank you for the feedback. Sumit is asking, sir, what if there is a lifetime software updates in future like Windows, right? Sumit, again, those will be your separate performance obligation. Okay. So every year, if you will provide an update and if you will collect something, then revenue should be recognized. Okay. So there is a separate performance obligation. Srishti is asking, sir, in question, if it is not specifically mentioned that installation service is taken from the seller or outsider, then answer need to be given for performance obligation from both sides. Yes, Srishti, you are right. Example number 6. Manufacturer enters into a contract with a customer to sell a customized tool and replacement part manufactured for the customized tool. Manufacturer only sells customized tools and replacement parts together, and no other entity sells either product. The customer can use the tool without the replacement parts, but the replacement parts have no use without the customized tool. How many performance obligations are there in the contract? So friends, the supplier enters into with a contract with the customer to sell a customized tool. It is not a simple tool. It is not a tool for everyone. It is a customized tool which is as per the requirement of the customer. It is a customized tool and replacement parts. And there are replacement parts also which is manufactured for the customized tool. And this manufacturer only sell customized tools and the replacement parts together, not as a standalone. And no other entity sells that either product. And no other, only this entity is selling these kind of product. The customer can use the tool, the customer can use the customized tool without the replacement part, but the replacement part have no use without the customized tool. So if the customized tool would not have been there, the replacement part would not have been any use. So how many performance obligations are there in the contract? Please tell me. How many performance obligations are there in the contract? 2 performance obligation or 1 performance obligation? So guys, it's a single performance obligation and the revenue from sale of customized tool and replacement part has to be recognized upfront. Okay. It is a single performance obligation, not 2 performance obligation, it is single performance. Because the replacement part does not have any use without the software, right? Interdependent. You are right, Sumit. It is interdependent. Yeah. Let me discuss 2 case studies from my Excel file also. Software company is selling a access software to a client. It also provides installation service. Installation service is a normal service and this can be done by any software engineer. Software company also sells goods on a model where client can take only software, only installation or both from this company. How many performance obligations are there in this case? Tell me. How many performance obligations are there in this case? Sale of software and sale of software and installation service. So it is a normal service, no highly integration, no interdependency, no customization, no modification, no integration, and goods and services can be used at their own or with the help of the other resources, right? In this case, there are 2 performance obligations, PO1 and PO2, right? For example, the software has been sold out on 25th March. And this installation service has been provided on 5th April. Right. In this case, the revenue has to be recognized. Revenue recognized on 25th March. And for this, revenue is recognized on 5th April. Why? Because the sale of software, the performance obligation is satisfied on 25th March and for installation service, it is satisfied on 5th April. Right? Clear? Now let me flip this example a little bit. Software company selling a access software to a client. It also provides installation service. The installation service requires high degree of customization and it is done by this company only as this needs high amount of knowledge about this software. The client always buy the product and the installation from this company only. How many performance obligations are there in the case? This installation requires high degree of customization. So how many performance obligations are there in the case? In this case, again same, sale of software, installation service, right? In this case, the software has been sold out on 25th March and the installation has been provided on 5th April. Guys, how many performance obligations are there in the case? In this case, in the second case, high degree of integration is required. There are single performance obligation. The performance obligation is single, right? Single performance obligation. So when the revenue will be recognized? When the revenue will be recognized? The revenue for entire contract, revenue for entire will be recognized on 5th April. On 5th April, right? On 5th April. Is it clear, friends? Is it clear? Yeah. Sumit, from where this 15th February came? Soham is now saying, sir, full concept clear now about contract and performance obligation. Great. Great, Soham. I'm glad that a lot of people are saying that, sir, everything is clear so far. I'm very happy, guys. Thank you so much. Okay. So, guys, I have covered 10 examples on performance obligation. Right. Yeah. Then let's discuss the principal versus agent concept of principal versus agent, right? So, friends, you must have bought the tickets from Make My Trip, right? You must have booked the tickets from Make My Trip or from Go IBO or from Clear Trip, right? Okay, Sumit, in the previous class notes, okay, in the previous class it was like 15th February. Okay, that classes was in February, right? But as far as fundamental is concerned, Sumit, are you clear on everything now? Yeah. So, friends, let's quickly discuss the principal versus agent example. The concept is, for example, I am buying a ticket from Delhi to Kolkata, right? From Make My Trip. So Make My Trip will show me this is Air Asia, this is Indigo, this is this is Air India, right? This is SpiceJet, and it will show me a lot of rates for these airlines. Okay. So when I'll book the ticket from Make My Trip, for example, the ticket cost is 5,000 rupees. Make My Trip charge 250 rupees as a convenience charge or as a commission, as a convenience fee or as a commission. So friends, tell me in this particular case, whether Make My Trip is working as a principal or Make My Trip is working as an agent in this particular case. Tell me. Whether Make My Trip is working as an agent or Make My Trip is working as a principal. So whether Make My Trip will recognize a revenue only to the extent of 250 rupees or whether Make My Trip will recognize a revenue of, let's say, 5,000 plus 250 and cost of 5,000. What Make My Trip should do? Second example, you guys must have booked ticket from Book My Show. You guys must have booked a ticket from Book My Show. What Book My Show do? Book My Show will show you a lot of cinema halls, a lot of theaters, a lot of multiplexes. And when you book the ticket from Book My Show, it will charge you a convenience fee of 100 rupees, 75 rupees, right? So the point is whether Book My Show is running cinema halls, whether Book My Show will facilitate, whether Book My Show is only facilitating you in buying the tickets for those cinema halls, or Book My Show is responsible for, running these cinemas, running these movies. So Book My Show is a company, is an agent who is only facilitating you to buy tickets from their portal or from their platforms, right? They are acting as a agent. So Book My Show will recognize a revenue to the extent of 100 rupees only, right? So friends, first of all, for recognizing a revenue, you need to see what are the performance obligation of that particular entity, right? Whether that entity is a principal or whether that entity is an agent. Who is a principal? Principal is an entity who provides goods or services itself, who provided goods or services itself, right? Who is an agent? Agent is a party who arranges for another party to provide goods or services. Like Make My Trip is arranging the flight tickets from Indigo or SpiceJet. Like Book My Show is arranging a cinema or movie tickets from PVR, right? So friends, an entity will act as a principal when three conditions will be satisfied. Indicator that an entity control specified goods or services before it is transferred to the customer, right? So who is a principal? A principal is an entity who controls the goods or services. So what are the indicators? Entity is primarily responsible for fulfilling the promise. Who is responsible for flying the aircraft, whether Indigo or Make My Trip? So Make My Trip is responsible for flying the aircrafts. Who has the inventory risk? Who has the inventory risk? Let me tell you. In the month of February, I went to Srinagar, right? I went to a vacation trip on Srinagar. And we have, booked a ticket of Indigo flight. And that craft was having a 200 seats. The craft was having a 200 tickets, 200 seats. But only 16 passengers were there. The entire craft was completely blank, completely vacant. Only 16 passengers were there instead of 200. So who has the inventory risk? Whether Make My Trip has the loss, has the inventory risk, or Indigo has the inventory risk? Indigo has the inventory risk. Entity has the discretion in establishing prices. Who will establish prices? Whether the airline agency or Make My Trip? Airline agency. Make My Trip is only facilitating, only arranging the tickets, right? So if these conditions are satisfied, these are the indicator which says that the entity is acting as a principal, not as an agent. Okay. So in this case, this risk lies with the principal, and principal will recognize the entire revenue of 5,000 rupees, and Make My Trip will recognize the revenue to the extent of commission only. Right. So if it is a principal, gross amount is going to be recognized. If it is an agent, net amount, which the entity is entitled to retain. So entity will not retain 5250. Entity has to pay 5,000. So entity will be able to retain 250 only. A principal would recognize revenue when or as transfer the specified goods or services to the customer. So friends, today, or let's say on 15th February, I have booked a ticket for 5th April from Make My Trip from Delhi to Kolkata. So I have paid 5,250 rupees to Make My Trip. Make My Trip will pay 5,000 rupees to Indigo Airlines. Indigo Airlines has sold one ticket the moment I have purchased the ticket on 15th February. So friends, please tell me, we have understood 5,000 rupees and 250 rupees. But when Indigo Airline will recognize the revenue, Indigo Airline is a principal. So when Indigo will recognize the revenue, when Indigo Airline will recognize the revenue, when ticket is sold, then which is 15th February, or when the services will be provided, which is 5th April. Tell me when Indigo will recognize the revenue. Indigo will recognize the revenue and the performance obligation will be satisfied. And when the performance obligation will satisfied, when it will fly its aircraft on 5th April, and it will satisfy the performance obligation what it has promised, right? And an agent would recognize revenue when its performance obligation to arrange for the specified goods or services complete. If you will cancel the ticket, then Make My Trip will not refund you 250 rupees. If airline will cancel the flight, Make My Trip will not refund you 250 rupees, right? So Make My Trip will recognize the revenue on 15th February, but Indigo Airline will recognize the revenue on 5th of April. Any doubt, any challenge here? Sumit, agent will recognize revenue only to the extent of commission, right? But principal will recognize full revenue, means only relating to the service. Like in my example, Indigo will recognize 5,000, Make My Trip will recognize 250. So friends, let's discuss this illustration number 26, and then we will conclude this session. An entity negotiates with major airlines to purchase tickets at reduced rates compared with the price of tickets sold directly by the airlines to the public. So there is an entity, and entity negotiate with the airline companies to purchase tickets in bulk at reduced rates, right? For example, let's say Ease My Trip. Is My Trip has contracted with Indigo, and Is My Trip said that okay, let me buy 100 tickets from Delhi to Kolkata. So I want to buy 100 tickets from Delhi to Kolkata. What is the price? Indigo will say that my price is 5,000 rupees. So Is My Trip is saying Indigo that this price you are offering to the normal customer, I am buying in bulk. So what price you will offer me? So Indigo is saying let me offer you 4,500 rupees, right? So the entity negotiates with the major airlines to purchase ticket at reduced rates compared with the price of tickets sold directly by the airline to the public. The entity agrees to buy a specific number of tickets and will pay for those tickets even if it is not able to resell them. Are you getting me? Even though Is My Trip will not be able to sell all these tickets, still Is My Trip will pay them 100 at the price of 100 tickets. The reduced rate paid by the entity for each ticket purchase is negotiated and agreed in advance. The entity determines the price at which the airline ticket will be sold to its customer. And this entity is determining a price, that at what price I will sell to the customer. I have bought at 4,500 rupees. I will sell at 5,500 rupees or 6,000 rupees or 6,500 rupees. So who has an inventory risk? This entity Is My Trip has an inventory risk. They have purchased 100 tickets, and if they will not be able to sell 100 tickets, the loss is theirs. Who is determining the prices? This entity is determining the prices. The entity sells the ticket and collect the consideration from customer when the ticket are sold. Therefore, there is no credit risk, right? So there is no credit risk. The entity also assists the customer in resolving complaint with the service provided by the airlines. However, each airline is responsible for fulfilling obligation associated with the ticket, including remedies to customer for dissatisfaction of the services. Determine whether the entity is a principal or an agent. Tell me, guys, whether the entity is a principal or is an agent. Tell me, guys, what will be the answer? Is it a principal or is it an agent? I'll give you just 1 minute. Okay, I'll give you 1 minute. Tell me what is your answer, whether it is a principal or it is an agent. Soham, what is your answer? Rohan is saying it is a principal. Radhika is also saying it is a principal. Okay. Why you guys are saying that it is a principal? Yeah. So friends, if I'll talk about the indicator, entity is primary. So it is not all. It is not all. These are the indicators. So who has the inventory risk? Entity. The Make My Trip has the entity risk, not the airline company. Who has the discretion in establishing prices? The entity has a discretion in establishing prices, right? And entity is also resolving complaints, although the primary responsibility is airline companies to fly the aircraft, right? So that is there. But these are the two indicators which are talking about that. Yes, in this example, entities is acting in the capacity of an principal, not an agent, right? Not an agent. So who is an agent? Who is working on behalf of somebody? But here, the entity is buying the ticket and then selling the ticket. So if you will recognize only commission income, it will detract the reporting of the financial statement. It will not show the substance of the transaction, right? You have actually bought. Why you have bought? Because you have got a competitive prices, and by buying a ticket, you got a chance to earn more, right? And you got a discretion for giving your prices, and that is why in this example, this entity will be considered as a principal, right? The entity concludes that its promise is to provide a ticket, that is a right to fly, to the customer. On the basis of the indicators, the entity concludes that it controls the ticket before it is transferred to the customer. Why? Because it is bought. Thus, the entity concludes that it is a principal in the transaction and recognize the revenue as a gross amount of consideration of which it is entitled in exchange for the ticket transferred. So the inventory risk belongs to the entity, and the price determination also belongs to the entity. I hope it is clear to all of you guys. Good. Yes, Sumit, it has to be written off. If there are unsold tickets and the flight has already been taken off, it has to be written off. Customer will sue to if there is a problem in services. The customer will probably sue to Make My Trip as well as Indigo Airlines, right? Even though if the customer will sue to Make My Trip or Ease My Trip will also sue to the Indigo Airlines, right? As a party, because the primary responsibility was to fly an aircraft belongs to Indigo, not to Make My Trip. Make My Trip has given right to fly, okay, to the customer. So friends, I hope you have enjoyed the session today. I know this is a lengthy standard, but please read this standard from your heart, right? Then you will be able to answer properly, right? What is the purpose of this standard? This is a substance-based standard, and substance says that if there is a contract with the customer, then it will come under the kitty of Ind AS 115. You need to determine what are the performance obligation. Performance obligation is more from the perspective of giving a control to the customer. Control is more from the perspective of, the customer will be benefited by using those goods and services. Sumit is asking, sir, Indigo will recognize revenue when they sold tickets to Ease My Trip. Answer is no. Indigo will recognize in the primary responsibility. What is the performance obligation? Sumit, what is the performance obligation of Indigo? The performance obligation of Indigo is to provide a service, which is to fly an aircraft, to take off an aircraft. So Indigo will recognize revenue. Indigo will recognize revenue when the flight will take off. Okay. Is it clear, Sumit? So, Sumit, Ease My Trip is not responsible for flying aircraft. Please understand what is the business model. What is the performance obligation? When you are buying a ticket from Ease My Trip, you know that Ease My Trip is not responsible for flying an aircraft. Ease My Trip is only giving a platform to buy the ticket, which is a right to fly. Right? Good. So Manini has confirmed that all doubts cleared. So thank you, Rohan. Thank you for this nice feedback. I'm really glad. Thank you so much, guys. Now I want to conclude this session. So today I have discussed a lot on the combination of the contract modification, when it will be treated as a separate contract, when it will be treated as a termination of the contract and creation of a new contract, or when it will be treated as a updation in the existing contract. Then we have also discussed the performance obligation. What is the performance obligation? It is a promised goods and services which are different, which are distinct, or a series of promised goods and services, right? So how the performance obligation will be determined? So for determining the performance obligation, you need to see when the goods and services will be distinct, and you have to apply two models. One model is you need to see at an individual goods and services level. If at an individual goods and services level, if you are able to say that the customer will get the benefit of the goods and services at their own or with the help of the readily available resources, like in case of TV and installation, in case of fridge and installation, in case of mixer, juicer, grinder and installation, in case of AC and installation. So when AC have been delivered, the revenue has to be recognized for AC. When that installation will happen, the revenue has to be recognized for installation. So first you need to look at from the individual goods and services perspective. Then you have to look at from the contract perspective. So from the contract, whether these goods and services are identifiable in the contract. So how you will determine that? You have to see whether the contract requires a significant degree of integration, significant amount of customization, modification, whether high degree of interdependency is there. If it is yes, then it is not a multiple performance obligation. It will be a single performance obligation, like in case of a construction activities, right? The construction activities will require a high degree of integration, high degree of modification, high degree of customization. The second example could be, have you seen elevators in malls? Have you seen elevators or lift in high-rise building or malls? Right? Johnson elevator, Otis elevator. Have you seen that? Johnson, Otis. Yeah. So friends, do you think that they are delivering this elevator or lift as it is in their premises? Answer is no. They are delivering the parts of that, and then they are assembling that part, right? So when they are recognizing a revenue, they are recognizing the revenue not only when they're delivering the parts, they are recognizing the revenue and they are assembling, and when the elevator or the lift will start running, right, then they will recognize the revenue. Johnson, Otis, 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 right? So thank you so much, friends, and thanks for your active participation. And I've seen a lot of queries, lot of responses are there in the query link or query box. Thank you so much. I have answered all the queries which have been raised by you. Still, if you have any query, you can write down to board of studies, and they will refer to me and I'll answer to those queries, or you can write it down to caalokgarg@gmail.com as well. Thank you. Bye bye. Take care.